Good morning, everybody. Welcome back to another episode of The Market Open. It is Wednesday, July 24th, 8:45 a.m. Thank everybody for being here. We've got a red market, folks. It's definitely a red market. It'll be very interesting as the market opens if we kind of pivot from the red that we're seeing. We've got to talk about Google and Tesla earnings because that was kind of the catalyst to create all the red that we are seeing currently in the pre-markets. S&P 500 is down 1%. So S&P here is at 548, down from 555 yesterday, down 0.93% on the day. Google is down 4%. Google right here, 175.39, now 4.47%. And Tesla getting hit the worst, down 8.6%. If we don't see any bit of a pivot, we are going to be looking at a potentially 10% day down to 220. Right now we're at 225 for Tesla. Now, all of that red from Google and Tesla, and we'll talk about the earnings. I don't think the earnings necessarily justify the red, but we'll discuss kind of the bull and bear case for kind of for why it's playing out and how the market might be selling it off. Nvidia ended up going red, down 2.65. Meta down 3% in the pre-markets. Microsoft is down 1.12%. HIMS is down 1.67. Bitcoin's up, but Bitcoin being up is not helping some other stocks like Robinhood, which is getting hit as well, down about 0.57% in the pre-markets. Financials are doing okay, but the broader market itself is down. And as you can see right here, Google down 4.5%. The reason it's down is because these earnings just weren't as strong as what the market expected. So we'll talk about the earnings. We'll go deep into it. Additionally, with the earnings, we just got a op-ed published on Bloomberg by ex-New York Fed president. I'll get their name up in a second. And he said, hey, if I was the Fed, if I was back as a voting member of the Fed, I would cut next week. I would cut at the next July Fed meeting, which, it's going to be next week. I think July 30th is when that meeting is going to be. Bill Dudley. So he said, I changed my mind. This is the headline of the title. I've been in the higher for longer camp. The facts have changed, so I've changed my mind. The Fed should cut preferably at next week's policymaking meeting. Now, I don't think we'll get a Fed cut in July, but there are people coming out saying like, hey, it's time for the Fed cut. Economy starting to weaken. We see it in the unemployment data. We're going to get the ISM data that I think at like 9:30ish today. We'll get that data, or maybe 10 o'clock. And all signs are signaling that, yes, the economy is weakening and the Fed should probably cut into some weakness, but not into a recession from weakness that is happening. So we'll talk about it and see what's going on. Thank everybody for being here. Let's do this today. We haven't done this in a couple weeks. Where are you watching from? Where are you watching from? What state, what city, what country? Where are you at? And we'll read off where people are from here today. David, thank you for the $27.99 super chat. Do you have any thoughts on the future of Tesla Dojo years from now? Do you think Tesla could slightly disrupt Nvidia and AMD and sell their Dojo chips to other companies? Okay, so your question, David, will trigger the transition into Tesla. Let's start off with Tesla and their earnings, and then we'll get into Google and go into that. Now, this is really interesting that you bring this up because Elon put out a poll last night. I'm curious if you guys know what the poll is, but it's a very interesting poll. And the poll is, hey guys, he's like, hey guys, so should Tesla take 5 out of the 30 billion we have in cash and put it into my new company called XAI? I was quite shocked that he actually put out this tweet. I personally think like it's not the worst idea. However, 5 billion of 30 billion in cash going into this is pretty insane, especially because they just raised $6 billion. I actually know a couple of people that got to invest in the private round. I think the valuation was 18 to 20 billion. So a lot of people are thinking, well, wait a second, this is kind of insane. You're using Tesla shareholder capital to like put into your new company. A lot of other Tesla shareholders are saying, wait a second, XAI is going to be bigger than ChatGPT, bigger than blah, 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 all these other AI companies, and Twitter and Tesla shareholders need exposure. So, David, to your question, you're saying, hey, do you think Dojo could be disrupting Nvidia and AMD? I'm not necessarily sure if Dojo could do it. Elon on the earnings call yesterday said that Dojo is progressing, but he gave a lot of praise for Nvidia, particularly around the clusters that they're building at XAI, which is why he even brought up the question of using some of those H100 clusters. I believe it's like 20 to 30,000 GPUs that are being stored there to help Tesla and FSD, which obviously there's synergies there. But the broader question is, do Tesla shareholders have exposure to XAI, because XAI is going to be the sort of heart and brains of all the AI ambitions that Elon has? And I don't know. We'll see what happens. Let me ask you guys in the chat, would you want exposure to the tune of $5 billion that would be out of the $30 billion in cash? I do think it's better than buying back the stock. I think it's 1,000% better than buying back the stock. The valuation would have to be at the same valuation they just raised at. If they invested at like a $50 billion valuation, then it kind of feels like you're using Tesla cash to just pump up the valuation of XAI. And so it is a little weird there. I'm sure there's some sort of conflicts of interest, but in general, I don't think it's bad for Tesla shareholders to have exposure to XAI. It's just at what price of the valuation and kind of how is that exposure going to be coming out? Okay, where's everybody from? And then we'll keep going into Tesla earnings. We've got Massachusetts, of course. Of course, we have Massachusetts. We have Saskatchewan. I think I can say Saskatchewan better than Massachusetts. That's crazy, bro. Chicago. We got Gene in Miami. James in Paramus, New Jersey. George in Toronto. Misty, Georgia. Marie in Florida. The Kitchen in Michigan. I love it. Maryland, New Zealand, Scotland, Canada. Amish County, Pennsylvania. Okay. Katie from Michigan. I love it. Golfing. You guys just like having fun, huh? You guys just like having fun. USA, Australia, Waterloo, Mexico, Iowa, Bakersfield, Montreal, Atlanta, Cleveland, Finland, Ottawa, Kenya, England. We got everybody across the world, dude. Thomas says, honestly, I wish Tesla owned a stake of SpaceX and XAI. I agree. I really wish there was a SpaceX stake inside of Tesla. However, SpaceX just kind of never needed the funding, but it would have been nice if Tesla could have got some exposure to that. There's probably not as much synergies between SpaceX and Tesla, but there's plenty of synergies with an XAI and Tesla. It's just, I hope that valuation is not, ridiculous that they buy it into. Jason says, I'm scared of it. Yeah, today is going to be a little bit of a scary day with the red. I'm not going to lie, but we'll break it down because I think a lot of the fear is probably unwarranted. And there is an argument for why we're going to get into a couple of weeks of choppiness, which we talked about on Monday, or this is a great buy the dip opportunity. And we'll talk about why it might be a real buy the dip, because those earnings yesterday necessarily weren't that bad, quite frankly. Arkansas, Tennessee, Miami, Missouri. Okay. Not bad. We got everyone across the world. Hey, Amit, did you get the invite to Miami from Robinhood? I woke up with an invite and they are offering to pay for my stay. That's awesome. So I did see that Robinhood real quick, and then we'll go back to Tesla. They're having a conference. It's like a trading conference, and it's super cool. It's called the Hood Summit, and this is going to be October 16th to the October 18th. I would love to go. It's just I'm going to be in India. I didn't get any email from them, so I'm going to be in India. I'm happy you got invited. No stress. You should definitely take that opportunity. That's super cool. But yeah, and if I wasn't going to India, I would have been going to California on that whole like private jet ride that I told you guys about. So everything for some reason good is happening in October. And yeah, I'm not going to be there for that. My birthday also is in October. October is the best month of the world, dude. October is the best month of the year, in my opinion. Everything good happens in October. The most babies were born in October. I saw that stat somewhere. I don't know if it's accurate, but I saw this stat. So yeah, that'll be pretty cool. Robinhood hosting its own summit. Vlad's going to be speaking there. They're going to have a bunch of different people. This is the website for this. I don't know how much it costs. It does cost to like attend it. I don't know how much it costs. It's in partnership with Sherwood Media, which, by the way, that's their new website, Sherwood Media. It's becoming really good, dude. I mean, this is the website right here. If you want to take a look at it, I've started using it to like read stuff. They have a lot of charts. It's like replacing some of the other news sources for me. And I'm really particular about my news because I need a lot of news every day. So this one's starting to get a lot stronger. And I think they're starting to build up a lot more brand around their media invitation as well. Okay, cool. So let's get back into Tesla. So first off, that was the XAI thing about Elon investing in it. Now, my general thoughts about the actual earnings. I thought Elon was pretty bored of the call. He seemed like he was tired. He seemed like he had spent a long night talking with Jordan Peterson, which he did. Jordan Peterson gave him a 2-hour podcast, and that 2-hour podcast, I watched a little bit of it. I mean, I like Peterson's work, but he was tiring, dude. I mean, like you could tell Elon was just like sitting there while Peterson was like lecturing him. And he's like, is this a podcast or is this a lecture? Like it was pretty rough. So as a result of that, I think he was just bored. As soon as the call started, zero enthusiasm. It sounded like he had a late night answering the same old questions. I don't blame him for his lack of enthusiasm. Some people say, doing is better than talking. I agree, but the one time or the 4 times a year when you have to talk about what you did, you need to have a little bit more excitement. At least, shareholders would appreciate that, especially after the stock is up 80%. Like, you would think he's a little bit, and he got paid. You would think he would walk into that call, even with crappy numbers, which the numbers, they were somewhat crappy, somewhat not crappy. We'll talk about the divide in a second, but you would think he would be more excited. He was not excited at all. For some reason, he sounded like he just wanted to go to bed, and he did not want to be there. So that was the first thing. Now, a couple quotes right here. So Tesla's learning from XAI and helping with FSD. There are opportunities to integrate Grok into the cars. I would support shareholders voting to use Tesla capital to invest in XAI itself. So that's where you got the poll for investing $5 billion. Then a couple of quotes around Trump. So Elon says, we are currently paused in Mexico. I think we just need to see where everything stands after the election. Trump has said that he would put heavy tariffs on vehicles produced in Mexico. So it doesn't make sense to invest a lot in Mexico if that is going to be in the case. So we kind of have to see where things play out politically. This is kind of bearish to me because Elon's basically saying we can't meaningfully produce cars in the Gigafactory in Mexico because Trump would just put tariffs on it. So I would imagine Elon thinks that Trump getting elected is good for other things that over determines how bad it is for other things, like not being able to produce in Mexico, because that was something investors were looking forward to in terms of Gigafactory Mexico being ramped up. And then he said this about Trump winning and getting rid of the subsidies. He said, he literally said, it would suck for our competitors, but long-term it helps us. Our value is autonomy. If you don't get that, sell Tesla stock. Everything else is just noise. So Elon being pretty upfront about, hey, there's one reason to invest in Tesla. If you don't get it, then just get out of here. Because it's not going to be around subsidies and cars. It kind of confirms the argument a lot of people thought, which is that Elon fundamentally believes the company has transitioned from selling cars to selling rides. And the question will simply be, will selling rides be the right way that he wants to go about this business? Quick look at the numbers. So overall revenues are up 2% year over year, 25 billion. So they beat on revenues. They missed on EPS, 52 cents versus 60 cents expected. Gross profit is up 1% year over year. GAAP gross margin is down 23 basis points. Energy is growing 100% year over year. So that's nice to see. That's awesome. $3 billion. It's just, not enough to really make a dent in the numbers in a sophisticated way. Tesla's priced at about a 70 PE. Tesla is 84 PE and it's growing 2%. Apple PE right now, 30 and it's growing 0%. So there are some names like Tesla and Apple that were down to start the year that have had some massive runs. They haven't shown the massive growth. So really, it's been a story question. For Tesla, it's been an FSD story question. For Apple, it's been an AI upgrade cycle story question. And those stories are what investors are betting on. But as of yesterday, I would think, after Elon got paid and the stock is up, he would really tell a more enthusiastic story. And he told the story. It just wasn't an exciting story. It wasn't this kind of story you wanted to hear with the enthusiasm in his voice that he usually has. And so that's why the call was kind of just boring, quite frankly. It really wasn't that exciting at all. And so I think that's why the stock is down, quite frankly. I think if Elon had a bit more excitement, and maybe this is not true, but it would have felt different. Like, as every time he kept talking, the stock would just fall further and further. And it's not like he said anything that was different from the numbers. It was kind of just like him not answering questions, kind of being nonchalant about stuff, saying, hey, we're going to talk about this later. Oh, Robotaxi event is definitely 10/10. That is confirmed. We'll see if that actually happens at this point. I hope it happens, but it's gone from 8/8 to 10/10. And he did say we'll be introducing other things besides just the Cybercab. But again, at this point, I think we just have to wait and see, because now it's a question of if he actually follows through on this. Here's what the analysts had to say about this. So we had Jefferies with a hold at 165. We see Q2 results highlighting the growing importance of storage and return to positive free cash flow. Auto average selling prices continue to drift, but COGS stabilized despite some positives. The earnings call reiterated known topics without much new information. I think that sentence pretty much sums up everything. There was nothing new that we got out of this. Stifel says buy 265. Q2 releases mixed with auto margins and free cash flow slightly missing expectations, but energy and storage revenues beat. UBS sell 197. Tesla is priced on AI, but we think it's uncertain. Bard 260 outperformed. Short-term auto margin weakness as a bottom line miss will weigh on the stock. However, timelines for Robotaxi remain intact. Citi neutral 258. Bernstein 120 underperformed. New low-cost models likely won't drive substantial demand. Wells Fargo underperform at 120. Piper Sandler, they're a little bearish, but they're bullish on the FSD forecast. And then Morgan Stanley, we believe the stock reaction will hinge on the analyst call, potentially setting the stage for a master plan 4 unveiling later this year. So really, you got all the firms not really changing their price targets or their outperforms, neutrals, or buys, but rather them saying, hey, if you were bullish, you continue to be bullish because nothing has changed from a FSD perspective. If you were bearish, you continue to be bearish because margins are going down and you really don't have clarity on when FSD is officially launching in the context of robotaxis becoming mainstream. Now, GM kind of pseudo shut down their robotaxi autonomous driving capabilities yesterday in terms of the production of more of those cars. Elon did call them out on the earnings call and said GM can't do it because they don't know how to do it. I think that's kind of bearish for the overall robotaxi sector, though. I do agree that's individually bearish for GM, but it's not good if one of the main people stops producing those cars, either because the economics of it don't work or because the tech is not that good. Obviously, Tesla has an advantage on the tech. But now H1 2025 is when we need to see robotaxis come out. Otherwise, it's going to be hard to see, if the multiple can continue to be justified. So here's the question for everyone now. Who's buying the dip on Tesla at 226 as the market opens in 30 minutes? Tesla and Google, and we'll talk about Google in a second, is definitely taking down the broader market. S&P at 0.92. Also, small caps not catching the bid either at 221. So they are falling. They're not going inverse to the market, which is what you need to see momentum. But that's not happening right now. So is this a dip buy or not? I want to say it's a dip buy. I also want to say it's, not something where you have to rush in and get super excited about the dip. I don't see us going below 200 though. So that's why I think it's also not the craziest thing to have a slight DCA here, because going below 200 I bet would be a massive overreaction, and that would be a, BTFD moment. Nothing we got in that call was different than what we knew. It was just not an exciting call, which is why I think it's down. And if that's the only reason it's down, is lack of excitement, then maybe the street buys it up pretty easily at that point. Bsoft says, I sold 5,000 of the 10,000 shares before earnings, rebuying the 5,000 at open. Still believe long-term, but at this point, it's technically a dream until it happens. Interesting. Well, I mean, you got a good scalp out of selling the 5,000. I do agree, and I think the street agrees. It is technically a dream until it happens. It's just a dream that most people are willing to believe in because you've got a leader like Elon who's ready to, sell you that dream, which is important. If it was anyone else besides Elon, this is what Elon had to say. If it was anyone else besides Elon, there's no way they could be like, oh yeah, just give us a couple years, FSD. It's like, no, dude. He's been promising it since 2014? It takes time. But definitely it's a little bit more pie in the sky until it becomes real. Tesla says Q2 is never exciting. Yeah, that's the other thing going into this, and that's my broader thoughts, and then we'll transition to Google. As I thought about it, I looked at historical earnings in the past for a lot of big tech companies. Q2 is not supposed to be exciting at all. Like Q1 and Q4 gets exciting, but Q2 and Q3 are kind of the dog days of just getting through what you need to do. So the idea that Q2 is supposed to be some massive earnings for a lot of companies, that's just never the case. However, we're in a massive bull market. Things are running and the stock market has done incredibly well. So now it's kind of like, how do we protect our gains? The only way to protect our gains at these astronomical levels with the S&P trading at, a bit of a premium compared to the growth that it's getting is for these companies to keep growing. And no one expected Tesla to massively grow because we know Tesla numbers are not going to be the best, but we did expect Google to grow. And we kind of got that with the Google. So overall thoughts on Google's earnings. Google's earnings, I thought, were actually pretty damn good. They beat on the top and bottom line, even though it was very slight. Cloud had its best quarter ever. Advertising was slightly down, but advertising quarter over quarter, but year over year, it's good. The problem was there were hard comps against Google. And that's why Google took a little bit of a hit, because they beat their numbers, they didn't beat them as well as they beat them in Q2 2023. So Sundar said, our strong performance this quarter highlights ongoing strength in search and momentum in cloud. We are innovating at every layer of the AI stack. Our long-standing infrastructure leadership and in-house research teams position us well as technology evolves as we pursue many opportunities ahead. Revenues of $85 billion, up 14% year over year, driven by search as cloud, which for the first time exceeded $10 billion in quarterly revenues and $1 billion in operating profit. So as you can see right here, operating margin, that's up 3%, 32%. Net income, $23 billion. That's up $5 billion year over year. I mean, it's quite incredible, dude. Only companies like Google can put up $23 billion in profit. And this is why that $23 billion just reminds you, hey, as much as small caps are exciting, there's only really like 7 companies in the world, maybe 8 if you put Broadcom in there, that can actually put up these types of numbers. And do you really want to sell that off for a trade on small caps? That is the only hesitation I have for small caps potentially not outperforming, that 40% target Tom Lee has by the end of the summer. But obviously, if Google got pricey, then we could see the rotation. But Google took a beating, not a beating, but it's down 4% because it's like market already felt that it got a little up there. So it'll be interesting to see if people end up buying the dip. YouTube ads, 8.6 billion. Google search, 48 billion, up from 42 billion last year. I mean, just incredible. Google Cloud at 10 billion, over 8 billion of last year. That's incredible. And then overall advertising at 64 billion versus 58 billion. So the core business has not been stopped because of LLMs or ChatGPT. So that drain on the stock in the early January, February part of the year was definitely good buy the dip opportunity. But now the stock is starting to get valued in a more sophisticated way, given that they are growing. And they decreased employees by about 2,000 over the year. So they've been able to do this in a more efficient way as they've scaled the operations up 14% year over year. So not bad at all. Why is Google down? I honestly think Google's down just because they didn't have a massive beat. That's the only reason I think Google's down. Google, Google right here. Meta's down because of Google. Nvidia's down because of Google. Google down 4%. That is quite little. I listened to the entire earnings call, and although the call was boring, they hit their numbers. They did what they had to do. Now, there's one reason why Google is down outside of just not having a massive beat, and this is bullish for Nvidia. So Google's CapEx, the street expected 12.2 billion. Google brought in CapEx of 0.4 billion. So Google increased their CapEx by $1 billion. And as a result of that, the market kind of looked at Google and said, well, wait a second, you're spending a lot more money than we thought you were going to spend on CapEx. Now, what are they spending on CapEx? AI infrastructure. GPUs, servers, all that good stuff. Why are they spending on that? We talked about it yesterday. If Google doesn't spend on that and Meta spends on that, then Google's kind of falling behind on Meta, right? So Meta can't keep spending this much. I think Meta spent 5.3 billion last quarter, and Google stopped spending because they're going to lose momentum. So all the big hyperscalers, which is the majority of NVIDIA's revenue right now, they have to spend on this IT build out. The monetization of that will come eventually. And obviously, if you're only growing 14% year over year, that is not the multi-trillion-dollar revolution that people were promised with AI. Google's argument to the market is, hey, our CapEx is coming, or the monetization benefits of our CapEx expenditure is coming, but you've got to give us time, right? Because it takes time to ultimately build it out. And until they build it out, the market's definitely, the cloud spending or the AI-based advertising is probably not going to see that much momentum. But that is another reason why the stock may be down a little bit. Here's what the CFO said in the context of this. So they said, and on the second question, in terms of the various work streams, as both I said, we remain very focused on ongoing efforts to slow the pace of expense growth, what we've been calling durably re-engineering our cost base. And I made this point in opening comments, but we are very cognizant of the increasing headwind we have from higher depreciation expenses along with the higher CapEx. And so those efforts are very ongoing. We also announced Axion, our new Google design and ARM-based CPU, and benchmark testing it has performed up to 50% better than comparable x86 base system. So their kind of core argument is, hey, we are spending a ton of money on this because we're getting momentum from spending money on this stuff, but you're not going to see the results in the earnings, at least for another couple quarters. And the street just kind of has to eat that up until it comes through. I think Meta's going to say the same thing. The Meta's going to be like, hey, we're spending billions of bucks a quarter on CapEx. But yeah, you're not going to really see the momentum yet. Speaking of Meta, Zuck's put out a model yesterday, a new model, 400 billion parameters. It's 405 billion parameters, new Llama 3 model. Or what is it? Is it called Llama 3? Llama 3.1, 405 billion parameters, the first ever open source frontier AI model, beating top closed models like GPT-4 across several benchmarks. So we're getting to the point where companies are getting ready to spend tons and tons of money on what it is they need to really get AI out into the mainstream, but they're going to do it at the expense of shareholders. Now, this is way better than using shareholders for the metaverse, but they're going to be spending money, and that money will need to be spent in a meaningful capacity. Meta's going to be worse on CapEx, probably. Thomas says, as long as Meta sticks within guidance, I think they'll be fine. If it comes in above guidance, well, then it could be better, then it could be worse. Yes, that is true. And I think it's already getting punished right now because the market's expecting Google will be worse than Google's being worse means the Meta could be worse as well. Hugh says, Amit, I'm new to this. If CPI is coming down, why would the Fed need to drop rates? So if CPI is coming down, that means inflation is coming down. The only reason we raised rates in 2023 was because we needed to get inflation to come down. CPI is just a read on inflation. And so if CPI is coming down and the economy is weakening, which is kind of what the Fed wanted to see, that's why they raised rates to de-stimulate the economy while inflation would come down. That is where you would get the ability for the Fed to inevitably cut rates. But we're going to have to see, when the Fed ends up cutting rates. Speaking of the Fed cutting rates, here's the article that came out by the ex-Fed president this morning, Bill Dudley. He said, "I changed my mind. The Fed needs to cut rates right now." Pretty interesting. So reading a little bit from here, slower growth in turn means fewer jobs. The household employment survey shows just 195,000 added over the past 12 months. Most troubling, the 3-month average unemployment rate is up 0.4% from its low point in the prior 12 months, very close to the 0.5 threshold that, as defined by the SAM rule, has invariably signaled a U.S. recession. Meanwhile, inflation pressures have abated significantly after a series of upside surprises earlier this year. The Fed's favorite consumer price indicator, the core deflator for personal consumption expenditures, was up 2.6% in May, not far above the central bank's 2% objective. Why then are Fed officials strongly hinting there will be no rate cut in next week's meeting? I say three reasons. First, the Fed doesn't want to be fooled again. Late last year, a moderation in inflation turned out to be temporary. We saw that in July. And so the market, took a nasty 20%, or about 15% beating in September last year. This time around, further progress in reducing year-over-year inflation will be difficult due to low readings in the second half of the year, so officials might be hesitant. Second, Chair Jerome Powell might be waiting in order to break the broadest of possible consensus, or get the broadest consensus. With the markets already fully expecting a cut in September, he can argue that the doves that delay will have little consequence while building more support among hawks for the September move, which I think is probably the big reason Powell is waiting, because he knows he'll get more unilateral support in September versus July. And then third, Fed officials don't seem particularly troubled by the risk that the unemployment rate could breach the SAM rule threshold, meaning the Fed pseudo wants a recession. The logic is that the rapid labor force growth rather than a rise in layoffs is driving the increase in the unemployment rate. This isn't compelling. The SAM rule accurately predicted recessions in the 1970s when the labor force was also growing rapidly. I think those three reasons summarize why Jay Powell and the Fed don't want to cut in July, even though a lot of people argue that July would be the right time to cut. I still think July, we're not getting a cut. Maybe there's a 1% chance. September, it's definitely going to happen. And then the question is just, is the economy headed to a recession by the end of September, which I don't think would be the case? And can small caps rally if we cut rates in September? Or is this going to be a cut into massive weakness, which won't end up being good for the broader economy? And so we'll see. But it looks like we are definitely going to get the cut in September soon. Here's Zucks yesterday talking about why they open sourced this model and kind of how they believe it's playing out. Let me see if I have the exact video on this. Actually, well, I think this video he talks about kind of the need for models in general, but this is one of the clips from that interview that's important. By the way, look like he does not look like how he looked in 2018 during his testimony.
There are hundreds of millions of small businesses in the world. And one of the things I think is really important is basically making it so with a relatively small amount of work, a business can basically, a few taps, stand up an AI agent for themselves that can do customer support, sales, communicate with all their people, all their customers. I kind of think that every business in the future, just like they have an email address and a website and a social media presence today, I think every business is going to have an AI agent that their customers can talk to in the future. And we want to enable that for all of those. So it's going to be hundreds of millions, maybe billions of kind of small business agents. Similar deal for creators. There are more than 200 million people on our platforms who consider themselves creators, who basically use our platform in a way that is primarily for building a community, putting out content. Feel like it's kind of like a part of their job is doing that. And they all have this basic issue, which is that there aren't enough hours in the day to engage with their community as much as they'd like. And likewise, I think that their communities would generally want more of their time, but again, not enough hours in the day. So I just think there's going to be a huge unlock.
I think what he's arguing there is for an AI bot of a creator to respond to comments. I will never do that. I think that would actually be horrible, quite frankly. You just have to figure out how to spend more time responding to people. So I don't think that would be the best use case of AI. But the broader point that Zucks is going for is, hey, AI agents are real. They need to be trained on very large models that are going to be in the trillions of parameters over the coming decade. And those models will provide immense amount of value to small businesses. So that's why Zucks is open sourcing this 405 parameter a 405 billion parameter model. And in later parts of the interview, he said that he thinks it's going to rival GPT-4, the latest GPT-4o, in certain benchmarks. Other benchmarks they're not as good at. But GPT-4o is a closed model. Meta put out an open model. And so when you think of it from that perspective, it's like, well, wait a second. If the models truly do become commoditized and there's not a lot of value there, then if it's just first mover advantage, is that the only reason why ChatGPT is winning? And if that's the only reason they're winning, can they be disrupted pretty decisively over the coming years? And so we'll see. We'll see kind of how Zuck plays it out. Matt says Zucks is enjoying those billions with that tan. I love that. Yeah, his transformation from a PR perspective has been absolutely incredible. I mean, remember in 2018 what Zucks looked like? Like it was not, dude. Like it looked scary the way this is what he looked like in 2018, and now he has a perm. He's wearing gold chains. Like he just looked like a scary guy who controlled the world, and he still is a scary guy who controls the world. But now he just looks cool, and it's not too bad. Douglas, good morning. Thank you for everybody being here today. All right, so let's go into Tom Lee. So although the market's down right now, Tom Lee has a reason for you to stay bullish for the next 7 to 8 years. And here's his thesis. We talked about this thesis before, but he reiterated it yesterday, and I think it actually makes a lot of sense. I want to know what people think on this. He believes NVIDIA can hit $1 trillion in revenues and the S&P can grow earnings 500%, or because the S&P grew earnings 500% in the past 14 years, that by 2030, the S&P can grow again decisively.
And there were people that said the S&P wasn't even going to make $60 again for a decade. That's why in the GFC, everyone said expect a decade of low returns. And I saw countless models. People said, well, inflation's going to be weak and GDP, and so it'll take forever to get to $60 in earnings again. Well, the S&P 3 years later had $90 in earnings, and and now earnings are expected to be $280. Okay, so we've gone from $60 to $280 in 14 years. Why do people suddenly think earnings are going to peak at 280? I mean, S&P earnings, is going to be over $1,000 per share in the near future. And I know it sounds incredible, but one of the things driving this, and we've written about it for our clients since 2018, is that the world is running out of prime age workers. So we have population growth, but it's growing faster than the number of people that actually can work. That difference in population means instead of paying wages, you have to pay a company to produce a machine for output. Okay, so that money is recycled into the S&P. By the end of this decade, it's almost $4 trillion a year in wages that are no longer paid to people, but to another company. If it's AI related, that could mean NVIDIA's revenue could be $1 trillion by the end of the decade. And NVIDIA's revenues are 100 billion right now. So NVIDIA itself could be a 10x. I mean, I think people are unimaginative when they don't realize they're not looking back far enough. In 2008, people didn't think S&P earnings would get back to $60 for a decade. So that's 2018. They didn't think we'd get back at $60.
But don't you think there's a shift?
So, okay. We talked about this thesis before, I think a month ago when he first came out with this argument. But I'm curious what you guys think. Tom Lee's argument here is that if we have a population decline, not in literally declining, but just, well, to an extent, literally declining in terms of just we're not producing as many people as fast to take over the jobs, but also the automation of certain jobs. So you got two elements there. Populations are going down populations aren't growing at the rate they need to grow at, even though they will be larger than what they're at today in 2024 by 2030. But also those jobs are simply going to be automated away. Then a lot of that labor is going to end up going to Meta, Google, NVIDIA, Amazon, et cetera, companies that are handling, maybe Tesla with Optimus, right? And that's a serious argument. I think that's a very big macro point. Again, Tom is a macro economist at the end of the day. He's thinking in the next 10 years, where is all the money going and where is all the labor going that's going to collect a lot of that capital? And if it's going to something as simple as AI agents to an extent, the Klarna CEO, by the way, remember 3 months ago, he did an interview the other day. I'm trying to get the clip as well, but he did an interview explaining the blog post he put out 3 months ago, saying they replaced Klarna as a buy now, pay later company. They replaced 700 call agents with one chatbot with their partnership with ChatGPT. I mean, dude, those are 700 people that just lost a job that were probably making 12, 15 bucks an hour. Maybe if they were in the Philippines, they were making, $6 to $8 an hour. Like, those are cost savings for Klarna that uniquely help Klarna shareholders, which is why owning equities is so important. But it definitely doesn't help the broader employee base. And, you could say it kind of helps the economy because maybe Klarna pays more taxes because they get more revenue, but they definitely don't inject more money into the broader population with employees that would then pay payroll, or they would then pay payroll taxes. Employees would then pay personal income taxes, and they would spend more. So that money's leaving the broader economy, and that money is leaving employees' pockets. If that happens to the tune of millions of people by 2030, the biggest companies in the world are going to be automating a lot of that revenue, and Nvidia uniquely will get a benefit from that. That's why he says Nvidia goes to 10 trillion, because all of the AI-based infrastructure needed to allow, for example, 700 people to be automated by ChatGPT. What is ChatGPT? It's trained on H100s. So Nvidia, again, is the sort of epicenter of where all this growth comes from. Nvidia's just going to be collecting more money. Either he's dead wrong on this, and this is a massive bubble, and semiconductor stocks should pop, within the next couple of years because AI has peaked, or this AI cycle truly does last until 2030. It would be very similar to 1994 to 1999. So we are starting 2023 to 2030 ish. It'll be very interesting to see how that plays out. And really 2024 is, I think, where you could say we're starting, because 2023 we're just discovering AI. Someone says, I'm confused. Feels like they are throwing random numbers. What is an economy without people working? Well, look, you're not wrong to be confused about this. There's a really good argument that we are going to have an existential crisis as a human population to try to figure out what do we do with the concept of work in the next 10 years. If massive amounts of people are unemployed, let's just use factory workers, for example. Let's say Optimus really does become a $25 trillion part of Tesla's business. First of all, amazing for Tesla shareholders, really bad for probably, I would say, in the tune of hundreds of thousands of employees that are replaced. For Optimus to get to 25 trillion, you're talking about a lot of labor replacement, which, by the way, a lot of those people that work those jobs, A, the churn is massive if you look at the research behind it. B, they don't really want to work those jobs. So there's an argument as well about, do people actually want those jobs? But let's just say that's replaced. Those people need something to do. And the government's going to have to kind of step in here, potentially, maybe a UBI. Like, A, they're going to need to make money. B, they're going to need to have some purpose, because if you don't have purpose, that's the easiest way for society to collapse. If people are just sitting home bored all day, right? You need people to be doing something. So it's going to be a very interesting dilemma that we're in if this kind of mass automation thesis happens. But for shareholders, for people like us in the chat that are owning equities, we should benefit dramatically. Right now, what happens to the rest of the world, I don't really know, and we'll deal with that when we get there. But like, our stocks should go up. The Mag 7 should benefit from. There's Amazon should massively benefit. Like, there's no reason, if Tom Lee's thesis is correct, the Mag 7 don't benefit from that. And you really got to ask yourself, what other companies are going to benefit? This is why ARK's thesis on like disruptive innovation inside of Zoom and Teladoc, it's just it gets worse by the day, because there's no larger story for some of her picks besides Tesla. And maybe Coinbase with the whole Bitcoin angle to really explode to those multi-trillion-dollar valuations going into 2030. But with the Mag 7, I think there's a case for all of them to gain momentum. And so we'll see. We'll see what ends up happening there. But it's going to be very interesting to see how it plays out. Sachin, what's up? Thank you for being here. Scott, what's up? Send your robo-taxi out to do work for you. Yeah, that's going to be it's going to be what ends up happening. But if there's less work, does that mean there's less spending? Potentially. I mean, that there's an argument there. That's why the argument for the UBI has been researched in depth. We actually debated UBI when I was in high school. It was one of the topics, and I learned a lot about the universal basic income as a concept. There's benefits to it, but the broader problem is just like, how much debt are we going to take to be able to actually spend on the UBI? And at some point, if people aren't working and have no choice, you would just hope you would have to probably put an extra tax on Nvidia. Like, if Nvidia's doing, I'm gonna put a crazy number, like $2 trillion in revenue a year, I would imagine like at least 2 to 3% of that is taxed, because the government's gonna be like, hey, we just like, you can't be making this much money, and like everyone's like starving. Like, there's just no way, right? So Nvidia shareholders will benefit dramatically, but the broader population, you might need the government to intervene a little bit. On Google, Piper Sandler price target to 206. They increased. Goldman Sachs price target to 211. They increased. Truist 196. They increased. Wedbush outperformed 205. Dan Ives says Google advancements in AI search have been significant, alleviating investor concern about the potential risk of generative AI. The company's progress suggests further upside. Mizuho outperformed 210. Guggenheim outperformed 205. RBC outperformed 204. MoffettNathanson, I don't know what firm that is, but outperformed 205. JP Morgan outperformed 208. Loop Capital says hold at 170. Bank of America outperformed 206. And then Rosenblatt neutral 181. So about 8 out of 10 of these upgrades they got, or just like, notes they got after earnings, are buy targets and the 200s. So if you're thinking of buying the Google dip today, at least the analysts would agree with you. But Google itself not really cooperating in the pre-markets. Let's get one more update from Google, and then we'll move on from there, and that's from Evercore.
Alphabet trading lower this morning after YouTube ad revenue came up short of expectations. That stock this morning down by 3.8%. Mark Mahaney is Evercore ISI head of internet research. Mark, you're actually putting out a new note this morning where you're reiterating your outperform. What did you see that's maybe a little different than what the street's seeing this morning? Stock, again, off by about 3.7%.
Well, Becky, you were right to call out the YouTube softness as a weakness. I think there were two, and what caused the stock to go from up modestly in the aftermarket last night to down was specifically the commentary about expenses in the September quarter, and margin pressure in the September quarter. We think that was largely due to timing. They had the hardware launch, these Pixel phones. It's usually in the December quarter that's pulled forward into the September quarter. So that's more of a timing issue. We still think that we have a pathway here to margin expansion. The company's committed to that for the full year. We think we'll see that and going forwards. There were a couple of really good bright spots. Search revenue growth came in better than expected. Google Cloud growth accelerated, and margins kind of came in better than expected too. So I sort of feel like you got three of the things that you wanted to see. There's a question mark about YouTube, but I think the weakness there was largely due to tough comps. I don't think there's anything else going on. And I still love this underappreciated product cycle at Google with the application of GenAI into search. We're seeing.
So again, the YouTube questions to me, not really that relevant. YouTube's going to be fine. It's just a little bit of quarterly weakness. The one concerning thing though, is that Google said, hey, our CapEx is like massively up. You would expect the semiconductor stocks to be up today, and all of them are red. So Google's red, and like Google's red for whatever reason, right? Google is like, they just didn't beat as much as they want to beat. But as you can see, every bank says outperform $200. This is an easy buy the dip. Like they're going to be fine. But they said we're spending a crap ton on CapEx, and Intel's down, SMCI is down, AMD is down, NVIDIA is down, Qualcomm is down, TSM is down. So we're kind of seeing the street not really believe in the semis story today, even though one of the 7 largest companies in the world said, hey, we're spending a crap ton of money to the tune of $50 billion a year, 52 to be exact, on semiconductors, right? CapEx, AI infrastructure. And still, these guys don't catch a bid this morning. So very interesting that the semis aren't really gaining that much momentum. But, obviously Google still believes that spending on this is important. One stock that is red in the pre-markets, ironically, is CrowdStrike. CrowdStrike got to 276 yesterday in the intraday of the around 1 p.m., 2 p.m. And then it fell off a little bit as Google and Tesla fell. I've started to do a lot of research on cybersecurity. I mean, I was up last night reading about 5 or 6 articles. I'll link a couple at the end because I don't want to go through all of them. But I've started to really believe that this is a space that cannot be ignored. It's a space to not trade. Originally, I thought of this as a trade. It's definitely a space to go long in your portfolio if you believe in the broader idea of cybersecurity. And then on CrowdStrike in particular, although I think it's still a bit pricey, it is the cheapest it's been since IPO on a price to sales basis, which is quite phenomenal. Like that it's actually cheaper than it was when it IPO'd, because this company has just always traded a ridiculous premium because they've been the leader in endpoint security. So could we go lower? Yes. I think after that Q2 guidance, we probably go a little bit lower because their sales and their full year 2025 revenue is definitely going to take a hit. But it is getting to the point where, now the market feels a 35% haircut maybe was enough. So we'll see. I am willing to buy the dip closer to 250, 240, even at that 260 range, 270, if it can stabilize here. But it's one of those companies where if they survive this, then, maybe this really is the most attractive prices going into the next decade of cybersecurity. And a lot of the other cybersecurity companies like Centennial and Palo Alto seems like they're only getting more important in their value as well. All right, here we go. 9:30 a.m. Wednesday, July 24th, the day after Tesla and Google earnings. Let's see how the market reacts. The stock market is now open. Wake your ass up. Here we go. Let's get into it. The stock market is now open. We got Centennial 24.4. That's down a little bit. Robinhood down 1%. Now, I know a lot of people are thinking, well, Bitcoin's mooning, or at least Bitcoin's getting to 67,000. Why is Robinhood down? I think two reasons. I think one, Robinhood's getting a little manipulated by the market makers, quite frankly. I think they're holding down the shares until the earnings because they know earnings are going to be good. Number two, market's down. Robinhood, again, kind of correlated with the market. A little bit more correlated with Bitcoin over the past couple of weeks, but yeah, I think that's why Robinhood is down. I think it's kind of artificially being held down right now. It doesn't really deserve to be down as Bitcoin goes up. But Robinhood right here at 2264, down 1% on the day. We'll see what happens on earnings. Google down 4.6% on the day, 173.37. So Google is taking a little bit of a hit right here, down almost 5% right now. Tesla down 8.9% at 224. 10% would be a legit correction on Tesla, down from around 250 to basically 220. We'll see if it gets there. Right now, 8.76, and we'll see if the dip ends up being bought. Google now officially down about 5%. There you go, 174 on the day. S&P is down 1%, 549, but it's getting green. It was at 548, so it's getting bought up as soon as the bell opens, even though it's red. AT&T, they beat on EPS and they beat on revenue. They're up 5%, so nice for AT&T. I think they added like 285,000 fiber subscribers, so they had some momentum there. Enphase up 8%. Enphase missed on EPS and revenue. I don't know exactly what they said in the earnings because I have to go through it, but I think they signaled that things are going to get better in 2025, and that's why they're up 8%. Rate cuts are also coming, which is going to be good for Enphase, but they did miss on the top and the bottom line. Visa down about 3%. They were okay on earnings. They had a slight miss on revenue. American Express, that's down about 1%. Microsoft down 1%. Meta down 3%. General Motors down another 1.9% after falling 6% yesterday. Wells Fargo is up. The financials are doing okay. Fortinet is up. CrowdStrike's up 2.3%. The only reason I think CrowdStrike's green in a stream of red is because it got sold off badly. So I don't trust this bounce yet by CrowdStrike. I would need a couple weeks of it holding 275 to 280 because it could easily just collapse right back below support at 263. But if you did buy the dip at 260, you've been rewarded because the market, again, is thinking that there's some momentum there. Robinhood at 2275. And again, the research I read on CrowdStrike, and I'll link the articles in the chat at the end of the stream. It's just always been expensive. This is the cheapest it's been since it's gone public. And so really the market's got to ask itself, do we think this situation was that bad that we need to sell it off even more? Or is this the dip that everyone's been waiting for people that are long CrowdStrike? And so I guess we'll see how the market determines that over the coming weeks. Google at 172. So Google is down. S&P 548. Palo Alto's down a little bit. PayPal's down. SoFi's down. Robinhood is recovering a little bit. Palantir at 28.45. Palantir did hit 29 yesterday. We stayed above 29 for a little bit, but right now we're at 28.44 on the day. Is Tesla down 10%? Is Tesla officially down 10%? Where's Tesla? Wow, red candle. Red candle. Ulta got a downgrade. That's why Ulta's down 4%. Ulta got a downgrade. That's why they got hit. What else do we have? Wow, Tesla down 10%. That is not the nicest. 10.1. It's going down even more. 10.2. 221. That, it's kind of weird because it's like nothing in the earnings was like upsetting. You're like, yeah, the growth is not amazing, but every investor knew that. Like, especially every institutional, that they're not stupid. Like, they knew the numbers were not going to be great, and at least there was some revenue growth at 2%. But I really do think it was Elon's energy. I think they just felt like he was so nonchalant about everything that they're kind of just waiting. It's kind of a show me story now instead of a believing in the dream until it plays out. Who's buying the Tesla dip? Who's buying the Tesla dip? Where is NVIDIA? NVIDIA's down 2.6. Robinhood 2273. IWM 221. So IWM getting a green candle right here, even though NVIDIA's red. Enphase up 6%. HIMS is down a bit. Bitcoin 66.6. Not bad. Maybe trying to make its way back to 67. All the semis are down, which is, again, it's weird because Google said they spent a crap ton on CapEx. All the CapEx is going to these guys. TSM, Broadcom, NVIDIA, AMD, SM, like all of these guys are the ones responsible for the hyperscalers costs. So weird that they're not catching a bid today either. Dell is down. ARM is down 165. ARM got upgraded the other day to 180. And then TSM right here, 160. Wow, TSM lost 100 billion and 150 billion in the past week. They were almost $1 trillion last week. How would you rate Tesla's earnings out of 10, Amit? I would rate them like a solid 7. Yeah, everyone knows 7 is like a cop-out answer, right? Because 6 is like, it sucks. 8 is too bullish. So everyone goes 7 in the middle. It's like it's like when you ask someone, what do you think of me out of a scale of 1 to 10? Like, 7, 7.5. That's them saying, yeah, we don't really. That's basically them saying a 6, but they don't want to say 6. Because if you would say an 8, you would just say an 8, right? But no, I think it was worse than good because the earnings themselves, like the numbers, sucked outside of energy. However, again, we all knew that. Everyone knew that. So FSD was the story, but I said a couple days ago, I feel like Elon's just got to like talk. Like I think I even tweeted, if Elon just waxes poetic about FSD, things will be okay. He did not do that. He sounded like he wanted to go play Diablo and get out of this call. He did not sound like he wanted to be there. And so that lack of enthusiasm, I think, is what is hurting Tesla right now. And so that's why it's bad. Well, it's not negative revenue, Matt. They're growing 2% year over year. They are growing revenue top line. Now, I know 2% is not a lot, but they are growing revenue. The EPS, yes, that is down. But again, the potential of it, the progress of FSD is still on track. The Cybercab is going to come out, in Elon's words, in H1 2025. I mean, like all the timelines you needed for explosive growth via FSD, those are on track, which is why I don't think it was like a bad earnings. But Elon just didn't sound excited. And so that's why it kind of feels like the street is selling it off for that reason. IWM is about to go green, folks. It's 37 cents from going green. So that one, maybe we see it get to green. NVIDIA still red. Wow. NVIDIA falling even more, down 3.3. NVIDIA was down 2%. Now it's down 3.3. So large caps are taking a hit. Where's Apple? Apple's down 1.2. Microsoft, wow, 439 on Microsoft. They're down 1.2. Meta's down 2.7. Google's down still 5%. Amazon's down 1%. And then NVIDIA and Tesla both down 3 and 10% on the day. I think I saw 20% of revenue coming from EV credits. Yeah, it is. 20% of revenue is coming from EV credits, which is weird because Trump would get rid of it to an extent. So again, you see Elon's like rampant support, and it's just kind of weird because it's obviously not going to help Tesla immediately. But if his argument is, hey, let's just get rid of Rivian and Lucid and these guys, maybe he's playing chess, and that's why he's endorsing him. But yeah, credits were a decent part of the revenue. Is buying a call on short QQQ technically a put? Well, buying a call on short QQQ just means, yeah, I mean, you think the market's going to collapse. Not collapse, but I mean, you think the market's going to fall. So if I buy a $10 call on short QQQ by, I don't know, August, I think the market will get worse. And so if this goes up, the market goes down. So if that call prints, it means because the broader market ended up going down. Look at IWM. There you go. You're green on the small caps. Now, here's the test. Can we get to 4 p.m. with small caps up at least 1%, while NVIDIA, Tesla, Google all fall 3 to 10%? If we can, we're back in the rotation argument. If NVIDIA starts making its way right back to 123, like it does every single time that we see this inverse, because we have not had a day where IWM closed green and NVIDIA closed red. We've had many days of NVIDIA going green and IWM going red, or both slightly going green, but never the opposite yet. And so today we're going to need to see if that happens. AMC is halted, is it? Wow, AMC is halted. Dude, this thing is barely up. How did it get halted? Like, what's going on? Why is AMC getting halted? Chris says you have to break down what parts of IWM are performing and which ones aren't. Yeah, well, the regionals are the main one. I believe they're performing. XBI is not. Regionals, again, up $58, up 0.42% on the day. XBI, which is the biotech part of IWM, it's slightly green today, but that one is not as green as KRE over the past month. Also, you guys want to know a stock that's in the IWM that's outperforming, that's definitely helping the index? Well, let me let you guys guess. Tell me the name of the stock in the IWM that's outperforming massively this year that is helping this index. That is a small cap. I'm curious if you guys know it. It's not Grinder. Goodness gracious. Where's Grinder right now? I'm buying Grinder when it gets to $9. Right now it's at 11.40. We got to get to 8.50 to $9 to get excited about Grinder. Let's see if we get there. I have a feeling, though, they're going to pump on their earnings, dude, because they increased the guidance. I feel like next earnings, they're going to crush it, and I'm just not going to be in the story. But it's just too expensive. I just can't buy it at these levels. Robin at 22.75. Google at 173. Okay, one person said it. Two people said it. All right, so I'll say it. It's not micro. I thought it was MicroStrategy. I found this out yesterday. It's Abercrombie and Fitch, A&F. A&F, which is up, I think, 200% this year or something like that. Abercrombie, how much is it up this year? This year, it is up 74%. Over the past year, it's up 326%. This bad boy is in the IWM. Market cap is $8 billion. So that's one of the companies that's helping. But the broader index itself is filled with so much junk. That's why it hasn't ballooned that much. Now, IWM right here up 0.48, 223. It's up 15% in the past month. So it's had a bit of a rally so far. TNA should be up about 2% right now. Yeah, TNA 1.4%. This has been the trade of July, IWM and TNA. And I wish my options got filled and I wasn't as greedy back in, we tried to buy them at the end of May, right before this, end of June, right before this took off. I got too greedy. And the reason I got greedy is because I don't want to overpay for bad quality, because IWM is bad quality, but the macro is definitely on their side. And so maybe it would have been worth overpaying a little bit. Did I say Abercrombie wrong? You guys don't expect me to say Abercrombie right. Like you like if I can't say Massachusetts right, I'm not going to say Abercrombie right. I used to love Abercrombie and Hollister when I was in like 7th grade. I remember going to those stores and I thought they were like super cool. I walked into one the other day and I was like, dude, who the fuck shops here, dude? Like, this is like, they've got these like models with 6-packs on the like billboards inside of the store. And I'm just like, dude, this is like the most douchiest store I've ever been in. And I don't know why in 7th grade. That's how you know the media has an impact on you. Like in 7th grade, that was like, I was like, oh, like I could be like one of those models. It's like, no, dude, it's stupid. Like, this is dumb. But their operating margins are up 700%. That's the story about how they increased operating margins by 700% in the past year and a half, and that's why the stock has exploded. What are the premiums on Tesla cash secured puts? Okay, so let's look at that. So Tesla cash secured puts right now. Let's see if there is some momentum on the Tesla cash secured puts. So if we do a month out, so now earnings are done. So let's go to August 30th. Sell put. Stock price right now is at 220. Wow, we're about to go below 220. Holy crap, dude. Goodness gracious. Amit wants Hot Topic. I remember going to Hot Topic when I was little. That store was also very interesting. Okay, so Tesla's at 220. Let's say we were willing to buy Tesla at 200. 485. Huh. What's that? 485 divided by 20,000. Again, 100 shares a contract. That's a 2% premium. That's okay in a month. If we're willing to buy at 210, so we got 785 divided by 21,000. That's a 4% premium. Again, it's not amazing. If you buy at the money, that's where the real premium is. So if you buy at 220 in a month, 1245 divided by 22,000, you're looking at about a 6% premium. Premiums aren't amazing. I would expect them to be up a bit more. I would expect them to be up a little bit more. Now, if you want to get a little greedy and go to 185, which is obviously much safer, 193 divided by 18.5, that's a 1% premium. Yeah, I don't know. I would expect them to be a little bit better. Maybe August 23rd is better. August 30th is not as good as I thought. 205 gets you 560. So what's 560 divided by 2,500? Yeah, still 3%. I mean, it's not horrible. Again, it's not horrible, but it's not like 7, 8, 9% premiums waiting in a month. Better to buy leaps than sell the puts. Yeah, I agree. Exactly, Douglas. The volatility is not paying so far today on the puts. The leaps probably are way more cheaper. The volatility is like, yeah, I would expect like 10 or 11% premium in a month and a half. This is like 3%, 5% for a stock like Tesla, where the volatility should be gigantic. Maybe we don't get 10% premium, maybe like at least 8 or 9%, but puts are definitely not paying as much as you would think it would. You're a good-looking guy, Amit. You could be an amber dude. Just put in the work. What does amber mean? Amber definite. Are you calling me a girl? Amber? Amber means a hard yellow light used as a cautionary signal between green and red. Interesting. I think that's a compliment, Joachim, but I'm confused what amber means. Are you calling me a girl or Palantir's down? Yeah, Palantir's going to take a hit as well. Palantir 2801. We'll see if it goes into the low 27s. It hit 2784, then rebounded pretty quick. But let's see if it gets there. You are a good-looking guy, but please hide that forehead. Oh my god. He's saying Abercrombie guy. Oh, I swear to God, I did not, dude. I thought he meant amber as like a. Oh, he could be an amber guy. That's what. That's okay. Got you. I thought there was. Look, I literally looked up the definition of amber, bro. I'm telling you, like I looked it up real quick. I was like, what is amber? Is that something to say? Hard translucent fossilized resin produced by extinct coniferous trees. I was like, what the fuck? Is he calling me a dinosaur or something? What is he like? Typically a yellowish color. If I was wearing the yellow shirt I was wearing yesterday, then it would really make sense. I'm sorry. That is this is why we do the Market Open Live. You guys see how I think in real time. Nvidia still down. Robinhood 2271. Google 174. Google is still down 4.2. Enphase is up. Bitcoin is running a little bit. Tesla, wow, 10.9. Dude, it's down 11%. Holy crap. Oh my gosh. Okay, so what do the leaps look like? If we buy the call, everyone likes the 330 in June 2026, right? Those are up a lot, but the 330 today is down 25%. It's trading at 43.50. I think a couple weeks ago it was like 69.70 or something. So that one's down. If you look at where we were at 270, that's at 59.85. What is put in the chat? What do you think Tesla stock price is in June 2026? The option chain goes out to $540. That's the most the market is expecting Tesla to be by June 2026 so far. What do you think June 2026 that Tesla stock ends up being? You picked up on no jokes in high school. Yeah, exactly. This is dude, when he said amber guy, I was like, what is he talking about? Kelly says roar in the chat. I was like, amber? Is that like is he calling me transgender or something? Like, what is he talking about? KRE at 58. AMC unhalted down 3%. Of course, it goes down after it's unhalted. Of course. Where's GME? We haven't looked at GME in a minute. Roaring Kitty hasn't tweeted either in a long time. That's down 2%. Chewy is up 1.15. Palantir 27.91. That's down. Okay, most people in the chat say above 300-ish. MJ is the highest with 1540. Canada just cut their rates. Did they just cut their rates? I think Canada just, yeah. Well, Canada new home prices declined in June. Let me make sure Canada cut their rates. Canada rate cut. If so, then the Fed's definitely cutting in September. Yeah, it looks like they cut the rates. Yep, they cut the rates to 4.5%. There you go. Bank of Canada cut their rates. All right, so we know the Fed's going to cut in September. That's definitely happening. Now we just need to make sure the market responds. Now we just need to make sure. Yeah, Joachim, we got it. We heard you. We figured out you were meaning to say Abercrombie, dude. I just interpreted it wrong. But the chat helps. Meta has a forward P of 24. How does this not get eat up quicker? I think the problem with Meta is now the market knows they're going to produce a nasty CapEx number. And that nasty CapEx number will likely lead to a little bit of a either sell-off or just reduced profitability, reduced operating margins, or they think that the monetization of AI, if Google's not seeing it, Meta is definitely not seeing it yet. So it's only going to be expenditure this quarter and maybe even next quarter before we see growth. Also, Meta's up 40% year to date. Google was up 30% coming into this. So both the stocks, like all the Max 7 are richly valued now, including Tesla. So them not losing 10 or 15% is the most important rather than them gaining 10 or 15%. But Tesla is not in that ballpark. Tesla down 11% right now. Wow, 218, dude. 218. Also, Meta has its entire business concentrated in ads, so it gets a lower multiple than the other big guys. Yeah, that's another thing, dude. Meta is not diversified at all. Like they have the Oculus and they have the they have that like what do you call it? That they built something where you could like video chat with people, some hardware device. But it's really ads. Ads is like 94% of their revenue last time I checked. WhatsApp ads, Instagram ads, Facebook ads. That's why Zucks wanted to make the metaverse, because I think he felt in 2021 ads were not going to be as powerful as they were, in the 2010s. But obviously ads are only getting more important, and Meta just hasn't had the ability to create something different. Also, the metaverse would have just been monetized via ads anyway. So it's not like the metaverse would have been that different. Palantir, so Tesla's down 11%. Palantir, wow, down 3.4%. So today we're finally getting a little bit of a dip on Palantir. But it's not like a really juicy dip down to 26 yet. 27.81 right now on Palantir. Everything's down. CrowdStrike somehow remaining green. I'm shocked CrowdStrike is green. I would expect CrowdStrike to get a hit a little bit more. I know it's down 35%, but again, there's two angles. I've been reading a lot of bear arguments and a lot of bull arguments. The bull arguments I'm reading from people who've owned the stock, so they're a bit more objective because they have a low average, so they kind of like, it's not like they just bought in or anything like that. But their argument is like, hey, we bought in a long time ago. This thing is cheaper than when we bought in based on the growth. So yeah, it's going to have some headwinds, but it's if you're looking to go long cybersecurity, this is still a premier name. The bear argument is that the lawsuits will mount up and people don't know if CrowdStrike's lawyers are going to be strong enough. Now, inside of their contracts, CrowdStrike has a very explicit clause, and pretty much every cybersecurity has that clause. That company has a clause that says, hey, we are only entitled to pay for the cost of the service, not your loss of revenue. Delta is still down today. I would imagine Delta's lost $1 billion on this, dude. They've had 43,000 canceled flights. Like, I think Delta's next earnings are going to be not the best. Now, is CrowdStrike going to pay them $1 billion? Probably not. And trying to sue them is going to be a waste of time because you're just not going to be able to win that case. I mean, you may try, but it's going to be tough. So if the lawsuits aren't that big of a deal, maybe CrowdStrike survives that. CrowdStrike is green because everyone who's going to sell is already out. Yeah, there was another article I found as well that said institutions didn't sell. It was retail. Palantir down 3.75. They were looking at a couple charts and they were saying, look, it really does look like retail took this sell versus institutions. They ended up buying the dip because they've been long CrowdStrike for a while. Surely at this point, it's a Delta issue. I agree. I really do think it's a Delta issue more than CrowdStrike. Delta is more of their software is ass, and CrowdStrike clearly showed their flaw. Yeah, it's unfortunate that CrowdStrike went bad for Delta, but United was up and running in a day. Delta, this is their 6th day. Delta's like bad. Like it's very bad right now. So I think that exposed a little bit more around Delta. The volume was just too much for retail, 100%. 100% agreed. So we'll see. Volatility index is up. The VIX, well, that makes sense today. VIX is up 10%. There you go. Yeah. Or sorry, not 10%, 7.61. Palantir now down 4%. I would still wait until Palantir, if you're looking at getting a dip, to see the low 27s. VIX right here, 7.61. And I could be wrong on this, but 27.47 was the last low we had on Palantir. Right now we're at 27.73. So this really isn't a dip yet. We got to break 27.40 to see like a dip. But down 3.68%. Again, if you really want to get in, sure. But Palantir swings from high 27s to, at this point, high 28s, and has done that since July 5th. So if we fall below 27.40, I think we're actually going to have a little bit of a free fall. Maybe, high 26s or low 27s even further. If not, then we stay in this range, and then it's not really a dip. It's just kind of just oscillating between these two levels, which means you might get it cheaper than 28.90, but it might not fall much lower than what we want to see. Palantir premiums on cash care puts aren't juicy either. Yeah, I was looking at this last night. I was thinking of selling puts on Palantir. The premiums on Palantir's puts are horrible. And it's kind of making me think the market's just not willing to bet that Palantir has a crappy earnings because they're just not paying up a ton on the puts. So like the premiums are bad, dude. It's it's just not as exciting or enticing, which is kind of a good thing for shareholders because maybe the market's bullish on earnings and they're not paying high for the puts because they're not buying puts because obviously they believe that Palantir will do well. So we'll see on August 7th or August 5th. This would be good for us to get to like 26 before earnings. I agree. 26 before earnings isn't horrible. I'd rather be at 26 than 29. I just feel like I just feel like the expectations are a little bit too high there at 29. Oh, Evan, stock market news. He just texted me. He said, BTW, I'm flying Delta right now. It's all good today, at least at LaGuardia. Okay, so that's good. So Evan, he was on the channel a couple weeks ago. He's flying today. And he says at LaGuardia, it's good. At Atlanta, that was where Delta had a really big issue. Clive says CrowdStrike can say goodbye to their big customers if they lost a lot of money because of the issue. So here's the part that I think a lot of people are wrong about, and maybe I'm wrong about it. CrowdStrike now going red. The research that I read over the past couple of days says this idea that large customers, large enterprise customers paying tens of millions a year are just going to leave CrowdStrike versus get a really good deal on their next deal is a bit absurd. You might have a couple of them leave, but think about it logically. If they leave, they're going to have to pick someone else. Like if you go to Palo Alto, which doesn't exactly do this, even the same thing as CrowdStrike, right? There's a reason CrowdStrike is growing so much. They are the leader in endpoint security along with Microsoft. If you leave, you're susceptible to new attacks almost instantaneously. Palantir 27.7. So they will get a sweetheart deal for sure. Wow, Tesla down almost 12% in their next renewal. But the idea that they're leaving, I think, is wrong. And the bull case is, hey, if they get a better deal, they're only going to deepen their business with CrowdStrike. They're only going to deepen their actual relationship with the company. So short-term volatility could definitely be there for CrowdStrike. But long-term, which I think, if you buy the dip on CrowdStrike, it's hard to do it as a trade. Like if you were a trader, you already got out of it. This has to be kind of an investment now. That might present an even better opportunity in terms of them building a sticky customer base. So I guess we'll see. But really, after he testifies, which he will be testifying, I think, in a couple days now because he got called by Congress, the CEO, we'll get more clarity there. IWM just went red. IWM, boom, down 1%. Meta's down 3%. We got a completely red market now. Nvidia down 3%. So IWM could not hold on to the gains ever when big tech sells off. It's just like impossible for this thing to go inverse. The only thing that's green I see is Chewy. And then Tesla's down 12.1%. Oh my God, it's at 216. Dude, this is like... I did not expect Tesla to go 12% down. Like, is it just me or did anyone think those earnings weren't that bad? Not a 12% decline. Like that's now CrowdStrike's actually getting hit. Okay. So it's not susceptible to going green if the entire market's red, which is another bear case for CrowdStrike. If the S&P falls 10%, CrowdStrike's going to 230. Like it's not going to maintain its momentum if the broader market falls. Then again, everything will fall, but still, this name that's already beat up. This is why buying the dip on this is a little scary right now. I think you want to wait till Q2 because it could go further, especially if we get into a little bit of a correction, which in August we tend to get a weaker month. And so that might end up happening over the next coming days. SoFi 717. This one, I hope to God this one does not touch $6 again because that would be very annoying. Douglas says this is the pullback we were all expecting. We knew the first 2 weeks of July were going to be good. And then after that, it would pull back. We knew this ahead of time. I agree. All of us knew this. And so if you position your portfolio for this and you're like, trading in and out of it, that's fine. But I think the far majority of people are still holding on to their stocks because they believe December is going to be where the rally kind of commences. October and then, makes its highs in December. I am curious what 2025 looks like. I feel like the playbook right now is make your money in 2024, sell it in the first couple weeks of 2025, so you don't have to pay the capital gains tax in 2025. You have a year to wait to pay the capital gains tax. And then hold on for dear life in 2025 and hope to God Dan Ives is right about this whole revolution around AI thesis. Because if he's not, I don't know, dude, kind of feels like we're overdue for some downside. And also historically, after the Fed cuts rates, right, we see some downside. That just tends to happen. But in the 6 months right after they cut rates, we have this Goldilocks period. So I feel like those 6 months are from September basically to February. And then maybe shit hits the fan, maybe it doesn't. But we'll have to see how the macro turns out and how the labor market turns out in January. SoFi's pooping because the broader market's pooping. Horrible earnings on a very expensive stock. What do you mean it's growing at 2%? Yeah, but the thing is, we knew, this is the part I don't understand. This is the part that makes me think that then retail was buying up Tesla going into earnings. And it went, wow, 215, down almost 13%. Everyone knew on Wall Street these earnings were not going to be substantial. There was no way Elon pulls a bunny out of his hat and he's like, hey, we increased by 10% because of X, Y. Like, no, like we knew it was going to suck. So why is the street acting like they didn't know this? Why was the street buying it at 230, 240? Or was that retail? Did the street get it from 160 to 200 and then retail took it from 200 to 270? Maybe that's the explanation. Because I just don't get like why Wall Street would buy it at higher levels, go into earnings, get basically the same information you had when you were buying it at 240, and then be like, oh, well, the story changed. Like, no, the story did not change. The story literally, nothing changed about the story. It's just Elon was unexcited. And I don't know if that's warranting of a 13% decline. That is at this point, $70 billion Tesla lost in 30 minutes on this. Street wanted a bunny. That's correct. Street wanted a bunny. But maybe it's retail selling. Maybe retail is taking a little bit of a sell. Kathy, people made fun of Kathy selling. The one thing I will defend Kathy on when it comes to Tesla, she knows how to time Tesla, dude. She loves to time Tesla, and she gets it right, I think 90% of the time. So her selling the past few weeks has been spot on. I mean, she understands Tesla. Now, granted, it pisses people off when you say it's going to 3,000, 10,000 share, whatever she says, and you sell at 200, but she does have to manage an ETF. And although she's not the best on timing at other stuff, she's definitely decent when it comes to Tesla. Yeah, this is definitely a bit of a haircut right here. Elon's giving us a gift to buy cheaper. That's always the statement after Tesla falls. Where's Palantir? Where is Palantir? Palantir 2758. So we're down 4.2%. Again, we got to see 2740, I think, to get a full 5%, and then we'll see if it actually falls after that. This is where it usually bounces. So let's see. Let's see if it bounces here or not. Wow. So the only thing that's green is Enphase, AT&T. Where's Robinhood? Robinhood's probably getting smacked right now. Robinhood 2240. Short QQQ is green. What else is green? Bank of America's green. Alibaba's a little green. Spotify, great earnings yesterday. I was listening to some of the earnings call as well. Really, I mean, they're just firing on all cylinders, and they're profitable. Spotify is green. Coca-Cola's green. Oh, the ETH ETFs had $1 billion of volume yesterday, not flows, but of volume. I think they had 100 million in flows. ETH is down a little bit right now. ETHW, that's one of the ETFs that's down 0.5%. And then Meta here at 473. I think the question here is today a buy the dip, or is today just the beginning of the dip over the next coming weeks? I think that's going to be the question. DNA, where's DNA? Yeah, I forgot about this one. 32 cents. Wow, that's up 8%. Okay. So Ginkgo's getting a little bit of momentum here. But that one has been beaten up pretty badly. Okay, let's get a little bit of clarity on Tesla. So former Tesla president went on today. Let's see what he has to say about it's down now 12% on the day.
Down in the pre-market after the company missed earnings expectations for the second quarter. Automotive sales actually dropped 7% year over year, and gross margins hit 14.6%. That was less than half the level from a little more than 2 years ago. Joining us right now on the quarter and the challenges and opportunities ahead for Tesla is John McNeil. He is the CEO of DVX. He's Tesla's former president and is on the board at General Motors. And John, let's talk about this. It looks like Tesla shares now down by 9%. That's about the equivalent of their year-to-date loss, too. What do you think of the earnings that you saw?
Well, I think we had a compare and contrast between Tesla and GM yesterday, for sure, in earnings. I think the story on Tesla is what's bad for Tesla is good for the sector. There's more competition, there's lower prices, there's continued demand growth. But the story is the competition's here, and now there are dozens of compelling EVs that give customers attractive options. And because Tesla's lineup is aging, they have to discount more aggressively. And as a result, Tesla's margins now look like everybody else's in the car industry. So Tesla's in an increasingly tougher competitive situation, which has forced them to discount. That squeezes their margins. And yesterday we saw that they had close to $1 billion of tax credits or energy credits in both their top and bottom line. And those will shrink over time as now the other EV manufacturers increase their output.
I hear what you're saying about your concerns with Tesla, but if you look at the business and finance section of the Wall Street Journal today, they lay out Tesla's here on the left. On the right, though, it says GM delays electric vehicle build out, a new sign of weakening demand. It sounds like it's not just Tesla that is dealing with this, John.
Yeah, I think that the GM is executing through this consumer demand. The growth is still there. GM is growing faster than the market in EVs. GM's EV volumes were up 40% year over year in the second quarter, while the industry grew 11%. So almost 4 times the industry growth rate. But you're right. I think it's an advantage that GM has to execute when they've got a gas car portfolio and an EV portfolio, and they can definitely manage their production.
So, I mean, he's right about that because GM has a diversified set of cars. The problem is if the future is self-driving, which is what Elon says it is, then, GM, Ford, those guys really don't have a moat. But today they're, getting a lot more love than Tesla. Tesla right here, wow, down 11.95. So getting a little bit of a green candle at 214, but still down 12% of the day. Robin at 2241. Palantir, see, there's the bounce right there. Again, 2750, that's where it bounces easily. And you need below 2750 for me to think there's a real dip on Palantir. So the bounce is really for the past 2 weeks, we've seen this green candle right off 2750, now at 2777. We need a bit more of a hit to get excited there. Google at 175, Google bouncing a little bit as well. S&P 5, wow, S&P's down 1.3. Huh. Maybe we get our first 2% red day on the S&P. We haven't got that in a year. But maybe it's time. Maybe it's time. S&P is officially down 1.34% on the day. Microsoft's down 1.3. HIMS is down 3.4. Bitcoin's pumping though. I mean, for some reason, Bitcoin's not really taking that big of a nosedive. Coinbase should be a little green today. Coinbase, yeah, it's barely red. They got an upgrade yesterday to 345 as well, I think by Morgan Stanley or JP Morgan, one of those. And the argument was, hey, just like Bitcoin's going to do well. And then MicroStrategy, yeah, that one's only down 1%. So the crypto stocks are a safe haven today. Crypto's doing good. A bunch of them are green. Marathon, Riot, even CleanSpark's barely down. But that's only because Bitcoin is holding up. What else? Tesla Energy is doing great, at least. Yes, this is true. Tesla Energy is doing good. Well, the Bitcoin conference is in like a couple of days, right? Bitcoin conference. It's in July 25th. So on tomorrow. Oh wow. So tomorrow it starts. I will try to stream it live tomorrow. I think it starts at like 12 p.m.-ish, maybe a little later. Trump's going to be there. Kathy Wood's going to be there. Michael Saylor's going to be there. RFK is going to be there. Vivek, Edward Snowden, Russell Brand. That's a hell of a list. You have a few senators that are going to be there. Ro Khanna from California. Bill Haggerty from Tennessee. So there's a decent number of people that are going to be there. Hopefully they just say something that gets it exciting. Metaplanet, yeah, I know about Metaplanet. They bought more Bitcoin on Monday. They're not available in US brokerages. Yeah, you're right. But Metaplanet did start buying Bitcoin. They bought it a couple months ago, and then on Monday, I think they bought more. Kamala Harris is going to be there. So this is actually a rumor. Yesterday, Fox News reported that Kamala Harris will be at the Bitcoin conference. However, Fox News said after that we haven't confirmed that yet, which is weird because people were saying Fox News reported it. So like multiple big sources were saying Fox News reported it, but then Fox News came out and said we weren't fully sure. What is so I'm not sure if Kamala's going to be there, but if she's there, that's a good thing because we need Democrats and Republicans to be crypto friendly, no matter who wins. But Mark Cuban did say yesterday. Mark Cuban said that Kamala's team reached out to him asking about crypto and AI. And so it seems like she's trying to at least get a grasp on how to talk about business with some of the, broader business communities. But it was interesting. She reached out to Mark Cuban. I actually asked on Sunday night, do you think Mark Cuban would be a good VP for Kamala? I don't think he would take that job, and I think she wants like another politician, but it seems like she's reaching out to his team to learn more about crypto. Saturday is the main day. Okay, so maybe we'll stream it on Saturday. Saturday will be the main. We got to stream whenever Trump talks and see what he says. Edward Snowden is going to be there. I think he's zooming in. He's on the website though. I'm looking at it right now on the website. He's going to be there. Maybe he is zooming in, but he will be there somehow at the conference. Biden is speaking tonight. Oh yeah, I'll be streaming that tonight at 8 p.m. So Biden's going to be speaking. We're going to hear we're going to see Biden for the first time and hear from him for the first time since he left the office or decided to leave the run for presidency. He's still in office. And we'll see if he admits that it was his health or what else he admits, but he's going to admit something here. And so we'll see. Okay, we have LVMH also had earnings that weren't the best. So let's get a little update on that as well, along with Visa. So we'll get through a couple of different earnings. LVMH, so we saw Burberry stock go down about 15% last week. Consumer spending for luxury is definitely slowing down, and we're seeing that right now with LVMH as well.
One, though, CEO sounded a little more optimistic. Listen.
The U.S. consumer remains a source of strength in the overall economy. Of course, the labor market remains strikingly resilient. Rising incomes have kept consumer debt servicing burdens relatively low by historical standards, despite high interest rates.
And then on the higher income consumer, LVMH is considered a benchmark here. And LVMH points to some struggles within the categories for the luxury consumer. For instance, champagne sales, they talked about severe demand shortfall when it comes to champagne. Continued economic and geopolitical uncertainties are still impacting certain businesses, notably wine and spirits, although there are signs of the situation improving for cognac in the U.S. Who knew that? As far as the U.S. in particular, they talk about the aspirational consumer, as they say in the early part of the year, a little bit under pressure due to inflation and higher interest rates that are taking a toll in terms of purchasing power, particularly in the U.S. and to a lesser extent Europe. This is not nice. And as we have reported many times, some brands, particularly in the U.S., are paying the price for this situation. They talk about, for instance, engagement rings at Tiffany's at the time when they're trying to boost that company not doing as hot. Although it really is brand specific in a way, because they do have they have this brand Loewe, which is really killing it right now. And we know Hermes, for instance, and Brunello Cucinelli have been outperforming, certainly brands like Burberry and Gucci.
This is not nice.
This is not nice. It's not.
It's not nice.
Taking a toll.
It's
inflation.
taking a toll. No, I know. We talked about LVMH at the end of at the last hour as well. Follows, by the way, other reports we've gotten also that you've highlighted, whether it's Burberry or Hugo Boss.
Yes, but as I mentioned, it's brand specific as well. So if you're trying to turn around a luxury brand with an aspirational consumer right now, it's not a good time. If you've already got it, you're good.
Well, these guys have it.
LVMH has
Yeah,
it, but
they got it.
But category specific and brand specific. They mentioned some issues in Champagne, for instance, and in Tiffany's, and that's, I think, a lot of the macro story. It's also China, which has been a problem for them and for all of the luxury brands. The macro story in China doesn't seem to be getting better.
No.
Tepid was the word that Coke CEO used yesterday.
Yeah. All right, let's get to one of the big stories of the day in terms of at least the stock market. You're looking at it right there. Tesla shares down about 12% this after an earnings miss. Revenues down 7% from a year ago. And perhaps even more importantly, margin estimates were not met. Phil LeBeau, of course, has got it all and a lot more for us. Phil.
You mentioned margins. Let's start there. Take a look at the drop in margins for the second quarter over the last couple of years. Second quarter came in at 14.6%. By the way, the street was expecting 16.5 to 16.9%. But if you look over the last couple of years, this is the story with Tesla. It used to be a margin story, not the case right now, down to 14.6%. 2 years ago at 25.1%. Couple of things happening here. One, we've talked about the pricing pressure in China and certainly here in North America. They addressed that on the call last night in terms of North America, saying, look, so many new models have come into the market. It's forced other automakers to cut their EV prices. That certainly weighs on us as well. What about a lower priced model? Well, that is still expected to happen in the first half of 2025. Details are scant in terms of whether it's an all-new model or if we are going to see a Model 3 or a Model Y that has been decontented and tweaked, so that would bring the price down. In terms of what might happen post-November, post the presidential election, what if former President Trump is reelected and he moves to get rid of the IRA, which basically helps EV sales with incentives? Elon Musk was asked about that on the call last night. Here's what he had to say.
I think it would be devastating for our competitors, but and it would hurt Tesla slightly. But long term, probably actually helps Tesla. That would be my guess.
As you take a look at shares of Tesla, he's essentially saying, look, other automakers, because they don't have the market size, the scale that we have, they need those incentives to bring in customers, as opposed to Tesla, which could withstand not having the $7,500 federal tax credit. One other thing to keep in mind as you take a look at Tesla, the robo-taxi, that unveil, guys, that is scheduled for October 10th. That's when we are supposed to get more details. He said yesterday on the call, he was asked, hey, when is the first robo-taxi ride? He didn't say it would be the first robo-taxi ride, but he did say you've got to have unsupervised, full self-driving technology in place. He expects the first ride for unsupervised, full self-driving technology in a Tesla to happen next year. He also said he tends to be wildly optimistic about things. So he didn't say take it with a grain of salt, but read between the lines.
Meantime, Phil, we've talked all week about rising inventories and pricing pressure in the industry, the downgraded GM today. But did I see Manheim used car data going the opposite direction this morning?
Well, when you look at what's happening with used cars, I have not seen that data yet. I've been sitting in here in the chair waiting to go on. So I haven't seen it yet, Carl, but I'm not surprised if you will see used car pricing, which has continually been coming down over the last year. It's supposed to stabilize and then slightly tick higher in the second half of this year, but certainly not anything close to what we saw as we came out of the pandemic, when there was such a rush to buy used vehicles that you saw a huge spike in prices.
Oh boy. So yeah, Tesla really not getting any momentum here. Palantir 2767, and then Tesla still down 12%. At least it's not down 13%, but it is down. Tesla can drop to the 200 simple moving average line. Yes, that is very possible. Surely car companies who have ICE in their product lineup will be more resilient to a drop in EV subsidies. Well, yeah, the GMs and the Fords, I mean, that might have helped them if the EV subsidies go down. However, again, this is where you've got to really have your future visionary hat on as an investor. Like, do you believe Elon when he says people won't be driving cars anymore in the next 5-10 years? You know, I don't mean that literally, but you guys know what I'm saying. They're going to be taking more rides than actually driving cars. Because if Tesla's selling rides, it's a SaaS business that has 85% gross margins. But if you don't think that vision or that future is coming soon, then as Elon said yesterday, quite literally, you just sell Tesla stock. There's just no reason to own it. And Elon has enough people in the world, institutions and retail, that believe that vision is possible. So it's just a question of if that vision ends up being the case. And subsidies is not going to make that vision possible. It's really Tesla's technology. MicroStrategy is up right now as Bitcoin goes up. But Trump canceling subsidies is, you know, it's relatively irrelevant, I think, to Elon, to that goal, which he has pivoted the company completely around that goal now. And he's getting the analysts to also think of the company. I mean, all the questions they asked was around FSD. It wasn't really about margins. Whereas I remember 2 quarters ago, every other question was like, what about the margins? What about the margins? And I think Elon has finally conditioned them to realize like the margins just isn't the story here. And if you're going to invest, then you can't really care about the margins. So that's what you have on Tesla. Bitcoin is up right now. Everyone's portfolio is down. Yeah, so I think someone said they're down 300 grand, that's a flex, dude. That's not too bad. It'll come back up and down, you know. But damn, dude, it's definitely this has been a CrowdStrike's getting hit right now. Yeah, I imagine. CrowdStrike's fair value, like zero premium, real fair value, is closer to 245. That's also another conclusion I came to from our research last night. So I don't know if we get 245. Like if we get 245, I would be very happy because like now I want a DCA and make this thing hopefully a 230, 240 average in the portfolio over the coming years. Maybe build it up to be like a $10,000 position. So that would be like 50 shares. But we really need Q2 guidance to kind of tell us more about the story and kind of how it plays out. But 245 would be super, at least close to fair value. So 264 is still at a premium if you look at it historically, but 264 is still the cheapest that it's been since it went public. So that's going to be, this is going to be just an interesting saga to see how this one plays out. I'm just curious now, how does the market approach a growth stock that has been trading at an A+ premium after a massive black swan event happens? How do they treat that stock? Does it leave the news cycle in a couple months and no one cares and it goes back to normal? Or is this really, or does it become a snowflake? I mean, the odds that CrowdStrike becomes a snowflake is very likely, dude. It's very possible. I'm not saying it has to happen, but Snowflake, after their data breach, they have not recovered. They've been down 40% year to date, and they just can't catch a bid. No one's willing to take a chance on them. Now, I think CrowdStrike is more important than Snowflake in a lot of areas, but still, that potential reality for CrowdStrike is very possible. And Q2 is going to determine most of that. Yeah, so Jensen selling NVIDIA is very confusing to me. I thought 2 weeks ago he was done selling NVIDIA. That was his scheduled plan. So I'm like, why? Like, maybe I read the scheduling of it wrong, but he sold like another 30,000 yesterday. And it's, I mean, I guess it doesn't matter that much because it's less than 1% of his, it's 0.24% of his stake. But he does keep selling every other day. I thought he was done, though. I thought like there was a schedule and he was done. But no, he keeps selling. Bezos selling too. Yeah, well, Bezos just rubs it in our faces. Bezos is like, I have an announcement. I will be selling all my stock and you will still buy it. And then everyone's like, yes, we will still buy it. It's like every time. It's ridiculous. Now, granted, Amazon got 3 upgrades yesterday, all to 225. Like the street can't get enough of it. Oh, if we look at the PEG ratios. So the PEG ratios on this are interesting. Amazon's actually one of the cheaper ones. I have this chart right here I want to show in terms of the ratios. Let's see if I can pull it up. Amazon's trading at a 1.2 price to earnings growth, which is like the metric you want to use to value a lot of the growth names. If it's above 2, it's a bit expensive. If it's 1 or below, it's a bit cheap. So Apple's the priciest at 2.8. This is all looking at 2025 future earnings. Then you have Microsoft. So Apple and Microsoft make sense. Then you have Adobe. And Adobe already took a hit this. See, Adobe is like, we're talking about CrowdStrike getting a haircut. Adobe took a 30% haircut as well. And the next earnings, they just showed good numbers and they got all of it back. So that's another, but Adobe historically, again, speaking on a name like CrowdStrike that is historically expensive, Adobe as well, historically expensive, but the business is so solid and AI is more of a tailwind than a headwind like it was 2 quarters ago. You know, the street ends up rewarding it. Salesforce at a 2.1x. Tesla comes in 5th. Amazon, look at that, 1.2 price to earnings growth. And then NVIDIA is actually below it, which is crazy because NVIDIA is going to grow like triple digits next year. Ryan says this is a Mitt's favorite ratio. Ryan, I understand your joke. It's because you're saying it's because it's PEG. And so you're making a joke there. See, you guys thought I didn't get jokes. This makes up for the fact that I didn't get the Amber joke because I got that joke. Now, me explaining the joke probably makes it not as fun, but still. So the PEG ratio here for Amazon, 1.2, Meta's at 1.4, and then NVIDIA's at 1.0. I don't even want to calculate Palantir's PEG ratio, dude. That's probably going to be ridiculous. Palantir's PEG ratio is I think it's above 2, that's for sure. Or it's close to 2 at least. But yeah, it just shows that it's a little bit more expensive. Okay, so where's Tesla now? Amazon 184, Tesla 217. Tesla recovering a little bit. It was at 214. Now it's at 217. MicroStrategy is up 2%. That means Bitcoin must be going up. Bitcoin is going up. That's correct. And Robinhood's going down. See, this is what I'm saying. I feel like Robinhood's being manipulated by market makers right now. I think they know Q2 earnings is going to crush and they'll let it run after earnings, but they're gobbling up shares low. And you haven't really been able to get Robinhood below 21 or below 22. Maybe they do that today. But if Bitcoin's going up, Robinhood should at least be seeing some momentum from Bitcoin, but it's not. So again, maybe the market's down. That's why Robinhood's taking a hit, but you would think it just has some upside pressure from Bitcoin. Google still at 175, so Google not making its way back to 180 yet. What's CrowdStrike's peg ratio? Let me see if I can find it. I would imagine it's above 2. CrowdStrike's peg ratio 3. It's a ratio of 3. So again, it is expensive still, and at 380 or 398 a couple weeks ago, it must have been closer to 5. But the thing about them is they have a couple more earnings coming up, which should reduce that ratio. Again, they just newly became profitable like a couple quarters ago, so that's why their peg rate. Same thing with Palantir. I mean, I know it's been 6 quarters, but they just recently became profitable. These companies we looked at have been profitable for almost a decade. So that ratio should come down with growth. But the problem is on CrowdStrike, again, the problem is, and this is the bear case, they're going to have to reduce their guidance. They're like, there's no way that if they don't reduce their guidance, it's going to be exceptional. But they're going to have to give so many rebates to so many customers because of this mishap that is just going to decrease sales. The question is, how bad does it do? 5%, 10%, 20% hit? If it's only 5 to 10%, maybe that's okay. But if it's 20% or more, then they're not going to be growing at 33% next year, which is when the real dip happens. I think CrowdStrike collapses after Q2. And I think it goes to like 220 after Q2, because no matter how good things are, they're going to come out with numbers that show decreased guidance. And immediately the algorithms and the streets can just going to be like, oh, so this was so bad. You guys aren't growing anymore. You're not a premier name, blah, blah, blah. But then in the call, they're probably going to say the reason, why everything happened and how they're recovering from it. And that's where I think the real dip is, closer to 20-ish, 230-ish, if we're lucky enough to get it there. So that's where I think it's exciting to go long on CrowdStrike. But we'll see if it gets that low. Enphase pumping a little bit. Enphase, yeah, one of the only green names. Wow, up 9%. Okay, Enphase getting momentum. What about Rocket Lab? That one was up yesterday. Rocket Lab, that's down 1.7. Okay, Rocket Lab is down. Would Microsoft or Google ever buy CrowdStrike? I read a couple articles on that yesterday as well. I think it's a long shot because the regulators would never allow them buying a $60 billion company that's as important as we all know as CrowdStrike. But I don't think it's crazy to think they would try. I just don't think it would ever happen. And quite frankly, I don't think George Kurtz would sell. I think he thinks this is going to be like a $300 to $400 billion company. If the TAM is $200 billion and they get 10 to 15% of the TAM, which they're well on their way to getting, you put a 30, 40 premium on that by 2030, this is closer to a $500 billion company. At least I think that's what George Kurtz believes. So I think that's why Wiz said no to Google's 23 billion, because they were like, dude, we could get to 100 billion. Why are we settling for 23? So I don't think they're going to sell, but it's going to take time, which is why it's got to be an investment at this point. Like if you're going to go long on it, you got to believe in the broader cybersecurity ecosystem. Google 175, S&P, wow, 545. This is one of the largest red days we've had in a while. Even last week, we didn't go down 1.4%. I think we stopped at 1.2. We're almost down 1.5% today. So let's see. Any thoughts on Square? I've never loved Square, but they had a really good earnings last quarter. They've given up a decent amount of their gains. I don't know why. I mean, like I listened to the earnings call with Dorsey, and I've never been a fan of Dorsey, but he crushed it on the last earnings call. I thought he did really good. They pumped up to 73 in July 17th. Now they're down at 64. Year to date, I think they're up year to date though. Yeah, year to date, they started at, oh wow, they're flat year to date. They started at 67 in January. I don't know, dude. I don't know. I'm not an expert on Square. I think the stock-based comp is a little ridiculous. I think Dorsey as a leader has not been the best, but like Cash App is growing. Their product is one of the best out there. I know Toast is a competitor and stuff, but in terms of B2B small business merchant payments, they're the premier ones. And then there is a Bitcoin argument there, but they don't really have a ton of Bitcoin. So when Bitcoin runs, like a lot of people don't trade Bitcoin on Square, and they don't have a lot of Bitcoin in the balance sheet. So Square doesn't tend to run that much either. Jack is very special. You should research more and you will love him. Earnings calls suck. Well, the thing I don't like about Jack is two things. Number one, I think he was pivotal in the Twitter censorship that we saw while he was the CEO of Twitter. Like, I don't understand how you could censor that aggressively. I mean, like, I'm not making this up, dude. Jordan Peterson called someone a her over a he, even though that person wanted to be called a he, right? So it's a transgender person who wanted their pronouns to be respected. Jordan Peterson didn't do that on Twitter. He was banned for 2 years until Elon. I'm just like, I mean, I personally respect people's pronouns because it's just like a not being a jerk type of thing to me, right? But if someone doesn't do it, I don't think they deserve to be deplatformed from the internet. Like, and Dorsey said, yeah, like he gave the go ahead on that. So to me, I'm just like, that's kind of insane, dude. Like, and the weird part about Dorsey is the dude is a Bitcoin maximalist who believes in like no government. Like, he is super anarchy, libertarian type of, we need to get rid of authoritarian censorship. And I'm like, you're the guy who led the largest censorship regime on the planet. And on top of that, you didn't innovate on Twitter. I mean, like, Twitter was a mess until Elon came in, and now he's paying creators, right? Like, it's actually growing. So that to me is a little insane. Like, I just can't believe that he thought it was a good idea to censor people for not using the right pronouns. And really not innovate on the product. And then on top of that, besides that, in the context of Square, I just don't think we've seen a ton of innovation from them with Dorsey at the realm. Now, I know Cash App is like an amazing product, but I don't know. I just don't think there's been some massive reason to like get excited about what the company's doing. It was the government, not him. No way, dude. I disagree with that. The government asked Dorsey to get access to all of the shit. And then Dorsey said yes. Like, I mean, think about what the government's doing right now with Elon. Literally, like Spain or something the other day, they asked Elon to like get rid of certain stuff. And Elon publicly said, hey, this is what Spain asked us to do. We're lawyering up. We're not doing it. So the idea that the government forced them into this, like, no, he was the CEO. He caved in. The company was public, so maybe he was worried about public shareholders, whatever's the reason is the reason. But at the end of the day, he let the government take control over Twitter. And I feel deeply about that, dude, because I've had my account shadow banned once or twice over like stupid stuff, like little mistakes, not even like I said something bad or something, just like little bugs. And it sucks because like you're just gone from the planet. And if you have, a big platform, you actually use the platform. Like imagine YouTube just says, hey, mate, you can't stream because you made a joke about transgender people. It's like, that would be kind of crazy, dude. It's like, it's a joke. Like, it's not a reason, to ban me from so like censorship hits home for me. It's becoming a bigger issue as I grow up. Bitcoin right here is 67,000. And the idea that someone was banned for a year just because they used the wrong pronouns, it doesn't fit right with me that could happen. And that was because of Dorsey. Make no mistake about it. That was because of Dorsey. That was absolutely because of Dorsey. So I'm just not a fan of that. And the thing about Dorsey is he's a hypocrite. Like, he's a hypocrite because he's saying everyone should get off Twitter and use like decentralized social platforms. And it's like, okay, so where was this when you were leading the centralized regime that was Twitter? Like now he's just like, yeah, everyone should like abandon the big tech platforms. It's like, dude, you were running the big tech platform. You never used your influence to get people off of it or build a separate one. You just like, it's very weird to me, dude. Very, very weird. So I just personally don't trust them. Oh, here's the other thing I was going to say. I forgot this. He gave Jay-Z $300 million for Tidal, the music platform, because he likes Jay-Z. Like, come on, bro. Like, look it up. He paid $300 million for Tidal for no reason. Like, nothing. Like, they didn't use Tidal. Square didn't need Tidal. They didn't need a Spotify competitor that's not really a competitor. So I don't know, dude. It was just, I think his mistakes in the past have been very weird. But he's big on Bitcoin, so maybe Square gets bigger into Bitcoin and then Bitcoin gets exciting either. Some people are saying Elon has some censorship. Look, I'm not saying Twitter is gone with censorship. I agree. Twitter has censorship to an extent. But from what I've seen, when Turkey wanted Elon to ban stuff, when India wanted Elon to ban stuff, when Germany the other day wanted Elon to implement new hate speech laws just in Germany for Twitter, Elon said no, and they're lawyering up at the cost of a lot of advertising money. I'm not saying Twitter's perfect. I'm not saying there's not any censorship, but it's a hell of a lot better than you get banned because you use the wrong pronoun. Like that doesn't exist on Twitter to what I understand. And so that is a bit different. Now, granted, maybe Square's cheap, maybe because it's sold. I mean, maybe it's flat year to date. Maybe there's an argument there. So I'll look deeper in the financials. Maybe there's something there. I know Rango, he came on the podcast a couple of weeks ago and he says he really likes Square at this level. So I'll talk to him. Maybe there's a broader thesis here. Market cap at 40 billion, price to sales of 1.7. You could argue that's kind of cheap. And I think they're profitable. They turned profitable, I think, 2 quarters ago. So they should be in a hopefully better financial situation as well. Okay, what else do we have? Amit, I think as you age, you go from woke to being awake. I do agree that, like, when you were younger, you kind of buy into a lot of the cultural arguments, and some of them are legit, but some of them get a little too extreme. And as you get older, you start paying taxes and you realize that a lot of this stuff doesn't matter as much. Which surprised me about Dorsey, because Dorsey's a rich guy, and he still fed into a lot of the censorship regime that existed in 2010 to 2020. And now he's just like, he said, screw it. Also, I mean, dude was running 2 public companies at the same time. I know Elon's running a bunch of companies, but I don't know if Dorsey is the same entrepreneur as Elon. So running Square and Twitter at the same time, it kind of felt like his focus was never fully there. It never felt like there was a deep argument for why he was committed to that. PayPal's at 58.68. That's down 1.7%. Taiwan Semi 163. That's down 4%. Dell's down 3%. Carnival Cruise down 2%. And then Tesla on the day is down 12%. Tesla's still getting hit. So why hasn't Elon criticized Dorsey? He did, I think, in the past. Now I don't think he cares, because Dorsey has endorsed Elon and endorsed X as a concept. But yeah, Elon and Dorsey are friends. Yeah, I don't think Elon has any bad blood. I don't have any bad blood towards him either. I just trusting Square means you have to trust the guy that did some of the stuff he did at Twitter. And it's less about the censorship. That's one thing. The broader part is the lack of innovation that existed at Twitter for 10 years versus what Elon's done in 10 months is astronomical to me. And I just cannot believe he was CEO for 10 years and they didn't have an edit button on your tweets or introduce a subscription service like Elon's. It's just the most basic things in a social media company they didn't do. And that's what leads me to think there's an issue there in terms of how he kind of leads. But granted, that might be the buying opportunity on Square as well. Dorsey's also buying Bitcoin every month and putting on the balance sheet. Yeah, I think he put like 200 million last quarter on the balance sheet. Not a ton, but they are putting more on the balance sheet. Okay, we have a bear case on Tesla. Let's take a look at this. So these guys that I'm about to show you have been bears for a long time. I believe this earnings was hilariously bad. Let's listen to their take and try to get an understanding on why they were so bearish.
Down on set and said there's nothing good about this Tesla quarter.
Yeah, it's hilariously bad. I mean, there's really, it's really hard to find anything that's good about this quarter. And I'll bring you back to early June when, Tesla diverted, 500 million high-end GPUs from them to XAI. And if you think about Robotaxi, yeah, they pushed out that event from early August, right, to, October. That probably gets pushed out there. To your point, Mel, it seems like some of the commentary feels like it's not coming. But when I think about this as an $800 billion market cap, and you look at the fundamentals of the actual EV business, you say to yourself, there's something way offside. So you better be into Robotaxi. You better be into humanoid robots. You better be into supervised full self-driving. It's not full self-driving anymore. They have to call it supervised, right? And that keeps getting pushed out. And the other point I'll just say is that, listen, they have low single digits percentage of Tesla owners who actually subscribe to full self-driving, right? And so if you think about their push towards lower end cars, do you think if you're buying a $25,000 EV that you're going to spend $10,000 on full self-driving? No. So to me, I think all those things are wrapped up in that valuation. And after the stock has rallied 80% off those recent lows, it just doesn't make any sense. Now, it's never made a lot of sense here. But the point I'll leave you guys with is the fundamentals of this company are really bad. And the things that people are buying the stock for are way in the offing. This guy has never delivered on any timeline. I don't know why you would expect him to do so right now, because he seems busy doing a whole host of other things.
Hilariously bad. That's the first time I've heard that term here.
These guys are so happy. You can tell how happy they are off this earnings.
So look, to me, it's always a margin story. So 20% of their gross profits came from regulatory credits. It was 12% in the first quarter. So when you do the back of the envelope math, it suggests that margins actually were about 14.6%, and the street was looking for north of 16.5. So if it's a margin stories, the margins continue to deteriorate. And given the fact that the stock has just gone up basically 90% from those recent lows, it suggests to me that it's probably, that's not my phone. I'm just saying. I looked at Tim. No phones on set. Suggests to me the stock is too rich here. So I'm, I wouldn't say hilariously bad, but I think the stock should be sold here.
Well, maybe bad considering.
Just to give some context, these guys on the panel have been bearish on the market since 4,300 on the S&P, and they've been calling for a crash for a while. So just to give a little bit of context. So they probably hate that it's up 90%, but they like that the earnings were bad. I mean, it's down 12% of the day, but again, it's up 90% in the past 2 months.
The climb, right? And what people
great Miley Cyrus song, as you know. I know it's on my Spotify playlist, The Climb. One of 2 Miley Cyrus songs, by the way.
All right.
Back to you.
Anyway, let's keep moving. So Phil was talking about caveats, and watch what I do here. Caveats in the case of Tesla have always been caveat emptor, if I may.
Nice
Remember
job,
that Brady Bunch with caveat emptor?
Now, you see, again with the phone.
That's not.
See, that's people at the NASDAQ.
Nobody can hear
Where's
this
Adina
phone
Friedman?
except for us.
Oh, I'm sorry.
Please go on.
Okay. Yeah.
Even though
So
that is a
you were
tangent
asking,
in
right? It was a
itself.
Brady Bunch where Greg was buying a car and Mike said, no.
Anyway.
The point is with Tesla, I agree with Dan wholeheartedly on humanoid robots. Suddenly, we're talking about this on a day when sales grew only 2%, profits dropped 45%. This is the problem with Tesla. It's a growth company without the growth. I'm not here to tell you a whole lot more than that. I'm telling you that the valuation makes no sense. And at this point, it's almost absurd that we believe anything Elon says in terms of the timeline for products that may or may not be part of the revenue stream. The revenue stream right now is that they sell cars and that ultimately they may have an FSD high margin dynamic. The analyst community is already pricing that in. They probably should because the margin's basically free money. And they're usually putting about 50% of that number into the cars. That's fine. That makes sense. And I would make an argument that if only 9% or so of the people that own it are actually using it, it may mean that there's a lot more to go. But in the meantime, this is a stock that's way too expensive relative to the space at a time when I think all the early adopter stuff, all of the subsidy stuff, the margin profile is something that's under pressure. That's really it. The free cash flow actually came back. So it's not necessarily that horrible burn story. Either way, it was never going to be about solvency, which it really was 4 or 5 years ago, if you ask me. But it's not that issue anymore. I'm just not paying that for this company.
Yeah, I mean, on those 2 issues for full self-driving, they were giving out those free, not samples, but like a trial period to anybody who wanted the trial period. So they are saying that they are anticipating that full self-driving attach rates will go up. They're also saying that in Q2, EV penetration return to growth. So if you believe these predictions, maybe we've seen sort of the worst of it in terms of the EV market. Dan is shaking his head, of course, but that's what the company's saying.
Well, okay. I mean, he said a lot of things, right? Some of which really came to pass, some of which haven't. I mean, to me, we did see them sort of facing bankruptcy. Remember that tweet of Elon by the side of the road with a bankrupt sign? But to see the cash at $30 billion, I think that was partially because they produced a lot fewer cars than the street expected. So if you're not producing cars, you're not using that money. But I've also, like the gentleman here, never been comfortable with the valuation at all. Does anyone else get any kind of credit for full self-driving? Right? Do we think about
in China? They do. I mean, that doesn't exist here. And the other point I'll just mention: last year they had 60% market share here in North America, and now that's dropped below 50%. So again, you're a small percentage of the people own the S and the X. Okay, those are the high-end cars, and those are the people who are more likely to actually pay for full self-driving.
What do we think? Do they have an argument? Or they're making somewhat of a valid point, or is it all just kind of bullying when the stock is down or when they have bad earnings? I think the argument they're making is the same argument people have always made about the valuation. It's not like that difference. It's just a question of, do you believe in FSD or not? Shout out to Chad. Chad says they are stupid. Chad actually had a little bit of run-in yesterday with his Tesla and his car. So thankfully everything's okay in his life. He had a little bit of a rear end situation, but Tesla is one of the safer cars that exists. And I think FSD is only going to make the world even safer. But if you're buying at this valuation, you're just believing that FSD is going to win long term. And that's the most important thing. That is the most important thing. Yeah, I think there's some truth to what they're saying, but again, the truth to what they're saying is just based on valuation. It's not based on where you think the trajectory of growth is for Tesla. Especially people that have used FSD. Like when I've talked to Thomas says, don't worry, Chad, Amit gets rear-ended every night. Chad is a joke guy, so he'll appreciate that one. He will appreciate that one. See, Chad, it's not just me who's funny. The chat is funny as well. It's the thing about FSD is that because it's so safe, you would argue that you are going to have less rear ending going on into the future. And you also can make a very, very broad argument that if we're getting into a world where safety is going to be the most important thing when it comes to electrifying vehicles, especially as we need grid security and we need overall energy demand to exist, there's a couple of layers that allow Tesla to have a multifaceted ecosystem, not only the energy necessary to sustain the electric grid and to create the compute for FSD, but also to actually enable a safe world in which FSD exists. As Chad says right here, I use FSD every day and it drives me everywhere. So people like Chad, and from the conversations I've had with him in the context of FSD, it's just one of the most incredible things in the world. It doesn't make some mistakes here and there. Yes, it's obviously not perfect. But if it's getting close to perfect, and this is a realization I've had as well as I've thought about Tesla. Like if it does, let's say FSD is 115% perfect. It's like, it's there. We're not going to get a mistake. If there's a mistake, it's from another driver. It's not from Tesla. If anything, Tesla stops, if another driver makes a mistake, then are we going to have a world in the next 10 years where people are actually going to be driving as much as they currently are? Or is it going to be a world where FSD takes over? And if you just believe it's the FSD version of the world, then GM, Ford, etc., those guys just don't win. They definitely don't grow. If we're talking about compounding growth machines, Tesla's not growing as much as it was in 2019, but that growth is on the horizon if they solve that issue. And it looks like they're at least getting close with 12.5 coming out. Matt says, would anyone feel comfortable using a robotaxi right now that they can't drive? I think right now you have a segment of the population that probably feels a bit uncomfortable with robotaxis, but if they figure it out and it becomes what it needs to become, Palantir 2766, Tesla 216, then I think more people decide to opt in to what a robotaxi experience looks like. I mean, look, I've said on record, I don't want to be the guinea pig for robotaxis, so I would wait to see, people doing it. And I think a lot of people don't care. They would just like get into it and see how it plays out. A lot of people are already doing it in San Francisco with Cruise. But once it's proven after like a year of, call it a couple 100,000 rides, I think it's going to feel like getting into an Uber. It's not going to feel as scary anymore, right? Like it doesn't feel scary getting into a Uber with a stranger. And maybe that'll be the same thing with robotaxis. Chat says, I would say I have one intervention per 100 or 200 miles, but normally because it's more conservative than I want it to be. Wow. I mean, see that I mean, like, and there's a lot of people like Chad that have FSD that at the end of the day are realizing that this actually is going to be the future. I have never fully experienced FSD for like a long road trip. Like I've experienced autopilot for a bit, but not like full self-driving. And so I want to experience that and kind of see but I've seen a ton of videos on it. And although, there are some videos like MKBHD where he almost crashes into stuff, there's a lot of videos online of just people cruising through their local neighborhood. Holmar blogs on YouTube. He posts like a video every day of him using FSD, and it's a pretty simple ride. Austin says, how does the power grid support all of this? Well, that maybe is answered by Tesla as well, right? And that's another reason energy is growing 100% year over year. Maybe Tesla is going to be the one to kind of solve that problem as it scales. Admit they already have guinea pigs. I drive it every other day. Yeah, but I'm talking about like the average person who wants to go to McDonald's and like calls a robotaxi on their phone, right? I'm not talking about the people that actually have a Tesla. I'm talking about order a robotaxi over an Uber. Like those types of guinea pigs who we need hundreds of thousands of people over the next couple of years doing that to really normalize it, because they're going to be the ones tweeting and sharing their experience and like sharing Instagram stories. Like we need to be normalized to call a robotaxi like it's normal to call an Uber or Lyft. Uber should be up, by the way. If Tesla's down 10%, wow, Uber's not even up. That means it's a really red day. You would think Uber goes up against Tesla. Where's the S&P? Wow, 1.5, guys. This is the reddest day we've had, I think, all year. I don't think we've seen the S&P down more than 1.5 all year. Maybe it happened a couple times, but the far majority of 2024 we have not seen a 1.5 day. If we go down a full 2%, it would have been the first time in a year. So it's definitely a red day. Chat says, I have a nuclear plant down the road, so my power rate is 10 cents per kilowatt hour. Yeah, see, even Vitaly, I mean, I remember when he shared me his energy savings, it's like, it's cheap, or it's definitely cheaper than having to buy gas all the time, especially if you're able to optimize it in your own home or your own business in a meaningful way. Meta's down, yeah. So we'll see how it plays out. But again, I think their bear case on Tesla is the same bear case they've always had. By the way, those two guys in particular, they have been bearish on CNBC since the market was at 4,500. I mean, they have been calling for collapse after collapse after collapse, and the market just disagreed with them. So they're happy that Tesla's down. But still, I mean, Tesla's up 80% from the lows. Now it's up like 50%. But I don't think necessarily this is something to complain about. 11% down sucks, but it's not like Tesla hasn't had its run so far this year. May, can you confirm the Kitman Labs FedStart partnership with Palantir? Kitman Labs. I did not see that. Let me see if there's... Yeah, okay, we got that. Yeah. Kitman Labs, a new FedStart partner with Palantir that is here right now. NASDAQ's down 420 points. Yes, the NASDAQ is down. Where's the QQQ real quick? QQQ down 2.48%. Okay, so that's down. So Kitman Labs, world's leading sports science and performance intelligence company. There's the logo right there. Okay, so why are they a FedStart partner if they're a sports science and performance intelligence company? I'm assuming there's more to them than just sports. Unlocking the limits of human potential. Okay, so this is the company. It just got announced as Palantir partner, FedStart partner. Kitman Labs. Okay. So it seems like they have a heavy focus on sports. I'm imagining there's some collaboration. Oh, defense. Here you go. There's defense part there. Optimize the performance and return on your most important asset service members, both at the individual level and across the force. In defense, readiness means security. Kitman Labs unlocks optimal performance outcomes for the most innovative defense organizations. Okay, so this is cool. So they basically, what I'm getting is they're looking at helping soldiers on the battlefield with their performance, their development, and their training. And obviously they need government contracts to be able to do this. Boom, there you go. Palantir FedStart, which really is one of the underrated parts of Palantir. Palantir FedStart is a platform that connects companies that are looking to sell to the government with Palantir's IL level 6 accreditation platform, etc., to get them into some of these government contracts. So that's exciting, dude. That just shows, again, the diversity of Palantir as a overall business. Scale and systemize development programs to prepare service members to perform at the highest levels of their physical, tactical, and cognitive capabilities to produce more service members of a higher caliber. So this company focuses on sports athletes. They're realizing there's obviously a use case on soldiers in the military, in the battlefield. And now they're partnering with Palantir to sell to the government. Cool stuff. Very cool stuff. I'll deep dive more on this and talk about it on Palantir Daily, but that is very interesting. And it just goes to show how many different ways Palantir has to get into the government. Palantir right here, 27.67, down about 4% on the day. They're actually a super soldier company. It seems like they focus on sports, but defense and sports seems to be the core pillars that they focus on. This website's really cool. I'll put it in the chat. This is a really interesting company. I didn't even know sports performance readiness for the military was a thing, dude. Okay, what else do we have? What else? They're making superhumans. Yes, exactly. Uber's down. S&P is down 1.52. Tesla's still down 11.8. Enphase down 11.34. It's just a red day, bro. It's just a red day. What did everyone have for breakfast? That's how red the day is. You start talking about breakfast. I had some cherries that I didn't finish. I still have them right here. I've come to like cherries, to be honest. I used to not like cherries because you have to spit out like seed or whatever. I don't like fruits that have that, but I've come to become a fan of cherries. They're not the worst thing in the world. Market goes so red. All we can do is talk about cherries. Oh, Bruce Jackson, thank you for the super chat. Really appreciate that, man. Thanks for the fun. It's an enjoyable stream, even when the markets are mental. Yeah, that's when we need the stream the most, when markets take a bad dip. Thank you, Bruce. I really appreciate that. Thank you so much for the $50 super chat. And again, I think we all kind of needed a little bit of a correction. That's okay. S&P was up 20%. It's okay to go down about 2%, but definitely will affect our portfolios. You ate a red fruit. That's why we're tanking. Well, it's not really red. It's like more maroon. But yes, that's why we're tanking. Amit prefers to swallow the seed. Dude, you guys are good. I'm not gonna lie. You guys are very good. I was talking my sister the other day, or not the other day, yesterday. She was like, imitating me on the stream. She's like, she came into my room. She started ringing the cowbell. She's like, "This is what you sound like." I'm like, "Okay, do you think you're funny?" She's like, "Can I come on your stream one day?" And I'm like, "You realize there's gonna be 1,000 people that have something to say about you, and not all of them are gonna be nice. In fact, the far majority of them are probably gonna be a bit more mean." And so she was like, "So I don't care." I was like, "Are you really ready to handle 1,000 comments coming at you saying XYZ about you?" And I was like, "I don't know if you're ready to handle that, dude." It's like, it's not the easiest thing in the world. I know maybe I make it look easy, but you got to have a thick skin. And also you got to be able to laugh at yourself. But not many people can handle that. Does she watch you get roasted all morning? She doesn't watch the streams, but she knows I get roasted all morning. She's a YouTube junkie, but she doesn't watch the streams, dude. She never watches. So my mom, my mom doesn't watch the stream, but she like sees the chat sometimes before the stream starts, and she sees all the late comments if I'm like 1 minute late. And she's like, "Why are you late? They're all so mad that you're late." I'm like, "Mom, I'm just like setting up the camera." Like my mom is taking your side. She was like, "You can't be late. Like all of them are upset." I'm like, "No, they're not even upset. They want me to be late so they can be upset." It's actually a bit of a gaslighting. They actually want the pain so they can make fun of it. So that's what they do. Why do you always try to scare people like this? What do you mean? What do you mean scare people? Oh, you mean like getting on stream? Well, no, it's true, dude. Like I don't think people understand. Like if you're gonna build a public brand on like Twitter or YouTube or something, like, dude, some of these DMs I get, like even today, I think I got a DM today that said, "Go kill yourself." I just like, you wake up in the morning and you say, "Go kill yourself," and you're just like, "Oh wow." Like I remember one time I said something about Elon, and someone called me a Elon cocksucking blah 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 blah. They had a lot of other words that weren't nice. And I think and then another time I had a critique that was like a tweet that was critiquing Elon, and someone else said something like, it's like you get it from both sides, right? They'll come at both levels, and the inevitable conclusion is you have to kill yourself. Like that's the conclusion all these people want you to feel. And it's like, I don't know, some people can't handle that. Some people cannot handle that. Nvidia's holding strong at 118. Nvidia is down 3.7%, 118. Yeah, Palantir is still holding strong though, 2770. Palantir is not really getting back to that 2740 level, which is where it needs to go down. Are value stocks up? Let's look at Verizon. Well, Verizon's not Berkshire Hathaway is a good metric on this. Berkshire is down today. Okay, so Berkshire also is not really feeling the love. It's not down as much, but it is down. Enphase is ripping. Yeah, Enphase is ripping. This is the product of a non-censored environment. Correct. This is why Jack Dorsey was censoring everything. I'm not gonna lie. Twitter is getting. You got to control the algorithm, because some stuff I come across on Twitter, it's bad, dude. It's like people that are saying nasty stuff and getting away with it because Elon's like committed to not banning people. So you got people saying some pretty aggressive. I mean, you just got to like mute those accounts or move on, because you don't want to wake up and see some of that stuff. It almost, some parts of Twitter are becoming like 4chan, dude, in terms of how like toxic it gets. But I'd rather have that than like a dictating, regime that lets you say what you want or you can't. Like I think as I grow older, I appreciate it, free speech over censorship. Chat says, my DMs are wild. People need to get better things to do with their life. Yeah, I think that's the thing. Like if you're going to be public at all, and Chad's not like a content creator or anything, but he's become very public. Also, Chad put out a recent video. I'm going to put that in the chat for people to check out on the Palantir Developers channel. If you're going to be public at all to any extent, you're going to get some level of like weirdness from people that are public because they just want to take a jab at you. Here's the video in the chat. So you got to be able to, so the way to laugh at it is like, or the way to deal with it is to laugh at it. Like if someone says to kill yourself, you got to be like, oh, wow, this person's having a bad, this person must have invested in Tesla at 270 or something like that. This is not a good day for this person. Like, I mean, I don't know what it would take for me to send that type of message to someone. Like life would have to get so bad for me to send that DM to like an anonymous stranger. Like it just, I don't know. It would be too much. I don't think I could ever do that. Jordan says, at least the CrowdStrike problems are done. It's not a repeat Boeing situation. That's another thing I was reading last night. A lot of people that are bullish are just like, dude, this is not Boeing. This is a one and done, and they're going to have to deal with problems, but they're not going to, have multiple planes fall out of the sky or something. It's down today as the market's down. We'll see. 250 gets really exciting. That approaches more fair value. So we'll see if it gets there. But one thing I am convinced of all the research I've done, which like I'm really happy I've just dived into cybersecurity over the past couple of days. Like it's like I'm just like I feel refreshed. I'm learning a lot of new things. IT spend on cybersecurity is going nowhere. Whether CrowdStrike is the winner or not, I don't know, but that is only going up. And so just like AI spend is only going up, even though AI hasn't really proven itself yet. But if it does prove itself, AI spend is going to go through the roof. Same thing with cybersecurity spend, which is more durable than AI spend right now because you just can't afford to be hacked. That's going nowhere. And so if it only goes up, then there's going to be some winners there. Kamala's not speaking at the Bitcoin conference. Is that confirmed? Is she not speaking at Bitcoin? Kamala, Bitcoin. Yeah, there you go. She's not speaking. CEO of the Bitcoin conference just said, that's a mistake. That's a mistake. She should be at that conference, dude, even if it's just to buy votes. She should be at that conference. Google and Facebook censor too. Don't forget. I agree. I'm not saying Google and Facebook are that much better. Twitter is just a unique platform where it's kind of seen as the public square, whereas Google and Facebook aren't really. But all of them definitely do censor. Damn, that's a mistake. Why is Kamala doing that, dude? She needs to. I feel like she should be. Okay, here's the question. Be objective here. Do you guys think Kamala can beat Trump? Be objective. Not who you want to win. Let me rephrase the question. Do you think she has a better chance than Biden at beating Trump? Because I think the answer is yes. She has a way better chance than Biden, but I still don't think she will beat him. But I do think it'll be a more competitive race than Biden. And we'll hear from Biden again at 8 p.m. today. I'll be streaming that. Because she's raised more money. Reed Hastings gave her $7 million yesterday. Like the big money's starting to come back. The vibe has absolutely shifted in terms of just the Democratic Party. I still think she loses because I don't think she gets Ohio and Michigan and Wisconsin and some of these places, but I think she puts up a better fight than Biden. But if she went to the Bitcoin conference, she would have a chance to get some of the independents that care about crypto because they're like, if your net worth is in Bitcoin, you have to vote for Trump. I mean, it's very difficult for you to look at your net worth decline if the government starts banning and putting out all these horrible crypto regulations, and then you realize you could have voted for a guy who wouldn't do that. So I think the crypto people they know they need to vote for Trump, but if they don't love Trump on a lot of issues, but they love crypto and Kamala supports crypto, that could be an argument for the Democrats. But see, and this is where they shoot themselves in the foot. If you don't embrace the stuff that people really care about, like AI and crypto, which is going to matter more and more over the next decade, I think you start to lose touch with a lot of the youth and with a lot of the technologists of society, like Silicon Valley. Philip says it's about winning the swing states. She's going to get more votes in the cities, but less in the swing states than Biden. I think I agree. First woman president is a big deal. I agree. I think some people will vote for her just because she's a woman, like my sister. But I don't know if she wins the rural white people in Ohio that feel like they're not being spoken to unless she tries to speak to them. So I guess we'll see. Abortion will be an issue. I think that'll get her a decent amount of votes as well. I don't know if that's going to be the only issue, though. That'll be what brings it home. Bitcoin pumping a little bit. S&P still down. Tesla still down 11%. Rocket Lab down 2%. Where's Palantir? CrowdStrike down 2%. Palantir down, okay, 4%. So we got a little bit more of a red candle there. Again, 2740, we're looking for the real dip. Dow down 5%. But we might just bounce from these levels. All right. I think that's it. Where's Shopify? Shopify, the only scary part about Shopify is that the consumer might be weakening, and then Shopify takes a nosedive from the consumer weakening if their guidance is low next quarter. So I would be a little just like skeptical of Shopify. They already had their pump off the upgrade a couple weeks ago, and that's still not enough to hold them up. However, if you're long in Shopify, then yeah, it's definitely cheaper than what you got it at the beginning of the year. But it got to 52 at one point. So if they have a crappy earnings, maybe we get closer to that 55 level. Okay. I think that's pretty much it, guys. That's it for today. Word of the day. Let's do word of the day. Then I'll get you guys out of here, and we'll be back 3:45 to see more red in the markets. Oh, I know this word. This is an easy word. We'll probably do another word after this. Theocracy.
Theocracy.
This is a form of government in which priests rule in the name of a deity. So this is more a religious-based government. In their theocracy, the sacred texts were considered the ultimate legal documents. Okay, so let's do another word of the day. It's more fun. Oh, this is an interesting one. Sanctimonious.
Sanctimonious.
Someone described as sanctimonious behaves as though they are morally superior to others. Language or behavior that suggests the same kind of moral superiority can also be described as sanctimonious. Well, I mean, when a stock falls and people start acting, like the Tesla bears today, like they were right, they're morally superior, that is definitely being sanctimonious. That is for sure. This is also an easy one too, though. Let's see if there's another one. We need some hard words, dude. I like it hard. Gregarious, we know that one. Oh, here's one. I don't know this word. Okay. Desideratum. Desideratum.
Desideratum.
What is that? Desideratum?
Desideratum.
It definitely looks like desideratum. It does not look like how does she say it?
Desideratum.
Who thought it was desideratum, dude? It looked like desideratum. Why does every like word of the day woman just like go opposite? I feel like they do it just to like argue with me at this point. It's the problem with the women, dude. They always want to be on the other side of an argument. Like it's ridiculous. I'm going to call it how I call it. A desideratum. Okay, that's totally wrong, but still, is something you desire or want. It's a fancy word for a must-have. Okay, so if today is a dip buy, then Tesla is the desideratum. If not, then looks like a constipation medicine. If not, then I guess it's not a must-have. You know we found the right word of the day when Amit can't pronounce it. Exactly. That's when we need the right word of the day. Otherwise, it's too simple. It's too simple. Desideratum. I mean, seriously, who thought it was pronounced this way?
Desideratum.
Who thought the E was a desideratum versus a desideratum? The way I said desideratum. You know what? This word is stupid. I'm tired of saying this word. I'm like, this word is just, fuck this word. This is just, that's how you know it's a good word of the day, because I can't even say the pronunciation that she said. But desideratum, I really think I need to go to the doctor, dude. There's like an issue with me pronouncing words. Like I can't say this shit. Desideratum. Like I can't even desideratum. It's so weird. It's like I'm talking all day, but certain words are just bad. This sounds like a Tool song. Tool is a band, right? Tool? Yeah, it's a rock band. Yeah, I knew that. I knew they're a rock band. I've never heard Tool, but they're a famous rock band. Yeah, I just chat says we get it. Words are hard. It's the D, exactly. It's the D in the word. You should get a pronunciation expert on the show as a guest. I should. That would be say banana. Dude, there's no way I'm messing up banana. This fucking banana. I hope I wouldn't say banana wrong. All right. That's it for me. That's it for today. Tool is incredible. Please listen to something. What is the best Tool song? I'll listen to it right after the show, and I'll tell you guys how I felt on the market close. I'm searching them up on YouTube Music right now. Tool. I'm not going to play it because YouTube's going to ban the stream, but is Tool really that good of a band? Sober, Schism, 46-2, The Pot, Pneumonia, Pneuma. How do you say this word? P-N-E-U-M. Wait, how do you say this word? Pneuma? 10,000 Days. It seems like that's their big album. What are these songs? Schism. Schism is the good one. Pneuma. Is it Pneuma or is it Pneumonia? How do you say this shit? Pneuma? Pneuma? Pneuma is a song by Tool. It's an ancient word that means soul in Greece. Okay, I don't know how to say it, but okay, I will listen to Tool and see if Tool was interesting enough. I like Pink Floyd. That's my favorite like rock band. I also like One Direction. That's not a horrible band. I know people will hate me for that, but I'll listen to Tool. I'll give it a listen. I'll let you guys know in the market close how I feel about Tool. All right, that's it for me. Thank you, everybody. 3:45. We'll be back, and we'll see if this dip gets even worse. Oh, Pneuma. That's how you say it. Okay. Thank you, Kelly. Pneuma. All right. There you go. All right, guys. 3:45. I'll be back then. Bye, everyone.